Bill, you and I met through an investment online. Uh, what is it? An online group run by Strawman Andrew Page. You got to do a shout out to Andrew.
Absolutely.
And we have progressed at different speeds in our Bitcoin journey and our investment journey.
Yeah.
You've been an investor for 20, 30 years.
Yeah.
Me for about 5. You've worked in businesses, managing accounts.
Yeah.
I've come from the teaching sector to now managing a business. And we've had very different routes, but we both are very passionate about Bitcoin, education, and the problems in society and in the world at the moment. You've got 2 young men that are growing into adulthood and wanting to have families, and you're seeing the problems with the world, and we're going to talk about that. We're going to talk about what Bitcoin is, why it's important, and what the problems are with the world, and that there are solutions there if you look. So we are biased in our opinions.
Yeah, big call out on that one. Yeah, that's right. Where we are today, we see eye to eye on many things. So it's important to probably put out there for everyone to recognise. But it comes from, I think, an experience. Like, I'm a 51-year-old, from experience in business, both running businesses but also being in some big corporates, and then electing essentially to not be in business and being self-sovereign. So, but Bitcoin, I think, provides us a lot of hope, and that's important. So hopefully we're able to share some of that logic.
I mean, you're here sharing your time because you care about educating people around it, and you speak about people about it all the time. Yeah. So do I. We're sick of forcing it down people's throats. Yeah, it's uncomfortable. And if you've found this channel, you've found this recording, you're seeking answers that might be there.
Yeah.
So your investment journey, like, I'd like to just chat about that real quick. What is an investment philosophy? Why do you invest?
Yeah, I mean, I was always someone pretty ambitious as a young person, whether I was playing sport or whether I was then in the workplace. And so always career progression was a key thing, and then wealth accumulation. So lived in a very, very fortunate time where interest rates were falling and we saw asset prices rising, and we continue to see that at the moment. So when I look at an investment, I never thought of what I was doing as an investment approach, but it was sort of, I was doing that. I was doing investing because I saw it as a mechanism to get further ahead with what I was saving and putting to work. So learned that quite early on, that if you spend less than you earn, you put that to work. If you put in the right things, they appreciate over time, appreciating assets. So that was sort of embedded in me. Because I grew up my mum brought myself and my 2 sisters up. So, I saw the heartache and what she had to sacrifice to provide for us. So when I look at investment strategy today, it's evolved enormously. And, I look at, you want to beat the cost of capital. So the cost of money, that's what capital is.
The interest rate?
Yeah, pretty much the interest rate. Yeah. We're looking at that 6-7% mark as your base benchmark. More recently, my view on an investment strategy is about, I want to beat the rate of debasement. And this is something that, as someone who has done a lot of hours in learning about Bitcoin and its attributes, it was a bit of an eye-opener around this concept of debasement. And what that is currencies, whether it's the Australian dollar or the US dollar or the euro, those governments essentially print more into existence as time goes on. I think the rate of printing in Australia for the Australian dollar was I think 9x since the year 2000. So I think there's about 260 billion on the monetary supply of the M2, and now we're sitting much higher than that. It's 9 times that amount. So why is that important? Well, when there's more money flushing around, obviously chasing scarcer assets, scarcity comes into it. And I know we're going to talk about that at some point, but when it's chased around the same amount of goods, naturally the price is the only thing that can move for you to get that. And that's what we've seen. We've seen that play out, particularly over the last 25 years, and even historically well before the dollar as we know it. But So more money in the system, chasing a similar amount or the same amount of goods for things that are more scarce. And we take examples like beachfront property, precious artwork, they explode in the price you need to pay because there's so few of them, or the ones that are in very unique positions demand much higher prices because they just can't be replicated. So my view on investment strategy now is I want to at least match that debasement level. So I think it's running at, my calculations are running at around 10% or just under that. So I want to exceed a 10% hurdle rate from an investment strategy. That's my base case.
So when you invest, if you're investing $10,000,
Yes.
you want a return of more than 10% each year. Otherwise, you won't invest, or you won't choose that investment.
That's right. That's the hurdle rate. So if I can't see that the prospects after doing whatever type of analysis for that investment is going to occur, then that won't be an investment for me. So because what essentially I'm aiming for is to preserve or exceed my purchasing power. So at some point, money's there to be enjoyed. At some point, I'll either pass that on to my children and their children, or vice versa, enjoy it with my wife. But to do that, I want it to hold its purchasing power, grow its purchasing power. And that's the aim of money, that it can buy you a little bit more than what you had, or a lot more. So they're the unknowns, exactly how that will perform. But by doing some analysis around, that's the base, that's the hurdle rate. If it's borderline, then I generally will wait until the price will move that it's a bit cheaper, and I might be able to then get that hurdle rate of 10% plus. So that's sort of the last, I'd say, 5 to 10 years where I've evolved as a strategy. More recently, moving into the Bitcoin space, the hurdle rate is Bitcoin. So what do I mean by that? Well, the compound annual growth rate of Bitcoin has sort of been is 50% plus per year. I don't see that as being sustainable long term. However, what we have seen is that it has occurred. I think we're well over 70% for the last 12 months, but if you average it out, because it does move up and down over the cycle, but that is my hurdle rate now. So what do I mean by that? So if I have $100 to invest today, if the investment I'm looking to put in, the money to put into, cannot achieve a 50% plus return, then the money goes into Bitcoin.
Right.
It's as simple as that.
You're comparing every investment to Bitcoin.
Correct.
Yeah. And we've done an episode on savings. We've done an episode on inflation, right? And we've talked about CPI. This is episode 107. CPI, the problems with CPI, the reasons why that's not a reliable measure of inflation. However, even suggesting that from 2020 to 2025, we're looking at 22% inflation purely from CPI, which, as I said, it's not true inflation.
Yeah.
You're suggesting that the monetary supply growing at 10% in Australia, and if we look around the world, other countries is much higher than that. We're privileged almost in a way to only have inflation of the monetary supply at 10%, which sounds ridiculous because what we're saying and what you're saying is, I think, can confirm this with me or tell me that I'm wrong. You're losing 10% of your ability to buy goods every single year. Not just goods, but assets. So we can now see, when I say the word asset, most people think housing. Obviously, there's a problem in housing. Yeah. It's everywhere we see it and we feel it, except for generations who have paid off their house. Fantastic. Yeah. But over the space of 50 years, since the removal from the gold standard in 1971, this problem is getting worse for people. Housing. What can you talk to around housing, and what's your thoughts on why housing is so expensive? You're talking about investment. You're talking about a hurdle rate. How does housing fit in with that?
Yeah, I think what we've been, when we've seen for the last 30 years interest rates sort of decline. We had in the 1980s for our parents. They were living in interest rates. What were they? It was, mid-teens. We've really seen a steady decline over the last 3 or 4 decades down to what did we get in COVID? 2%.
We're getting
3%?
zero, yeah,
Yeah.
2% of
Okay.
what we're paying.
All right. So that is really conducive to real strong asset and inflation and asset prices rising. And we saw that no better than our housing market in Australia. I think we're in the top half a dozen countries in the world for housing affordability.
As in we're bad?
That's right. To purchase a house requires 10 times your average income.
Yep.
Whereas I know when me and my wife in 1991, I think it was, we purchased a house for 3 or 4 times our income, and that's very significant and very different. So when we talk about inflation, I mean, depending on what lens you're coming from or what angle you come from, there are some things like whether it be fresh fruit and veggies that we see the seasonality of that. So you can sometimes, I think I remember buying broccoli earlier this year at $15 a kilo, and just recently, go to the markets and buy cauliflower or broccoli for like $3 or $4. So big swings like that, and that's just market forces and demand supply. So if demand can't soak up the supply that's available, then price falls, which then aims to pick up the demand side of it. So I'll buy more cauliflower, a little bit more, not too much because it only has a short life.
And it's cauliflower.
Yeah. I don't want cauliflower. It's not about, but you know what I mean? Like you pick up, the market will determine and move that accordingly. And if it needs to drop to $1 a cauliflower to move it before it has to be spoiled and thrown out, or it is spoiled, then so be it. But what we're seeing around asset prices is that I think that whether it's the generation before us, a lot of money has moved in to preserve wealth into housing in Australia. So I'm not sure if there's a clear decoupling, but traditionally interest rates were the guide to housing moving either positively or negative. So in other words, as interest rates fall, it enables people to borrow more and push prices up. So that's what you saw as a correlation. And then the inverse happens, whereby interest rates rising should see either flattening or a decline in housing prices. We're not seeing that so much anymore. I think in Melbourne, we've seen some sort of flattening of prices in the last 12 months or so.
Why do you reckon that is, to cut you off?
Yeah, so to me, the response to that is you need to put your money to work in an asset class of some sort. And what we are all familiar with and what is the system at play is that housing is the solution. And the government policy is very conducive to that. Whether you're an investor or you just want to, have as a utility, it enables you to benefit from that, because the view is there's an appreciation element over a period of time. Historically, that has been true, and that might be true going forward. But the price you're paying for that today is extraordinary. You mentioned earlier, I have two boys, 25 and one's turning 21, and the 25-year-old has a fiance, and they'll be looking to purchase something, or they would like to. But when you do the calculations for them, that his partner's a registered nurse, he's in middle management, so
very good jobs,
doing well,
right?
Yeah, absolutely, and credit to them. They've studied and they've gone into the workforce now. So earnings isn't the issue. It's more what's the lifestyle they're going to choose in purchasing some, and where does that need to be? So they're working through that. But if they were to do it now in an area around their family, it will equate to 10 times their income. And we live in outer southeastern of Melbourne. We're not in inner east, so or in Sydney in many of the suburbs and North Shore or something like that. So I think housing has now become where you park your money because you've got the appreciation. And I think when you combine the housing affordability in combination with migration that we've seen continues to come into the country, it does put pressure for those who are existing in the, looking to make an entry point for it to be affordable. And we just don't address that. We don't talk about that. I think the Minister for Housing has categorically ruled out for prices to fall policy that's just come out this week. think, what are we, the 27th of August, we're recording this.
Mm.
But from the 1st of October, you will be able to have a 5% deposit.
Mm. And the serviceability has changed too. You can now borrow more.
Yes.
And borrow up to 95% of the asset.
Without even mortgage insurance.
Yes.
Now, I can see from an affordability point that will bring more people into the market who might have been looking. But the rationale, there's reasons why we have these, not restrictions, but these criteria to enter the market. And that is that you're susceptible to a price decline. If something was to go wrong with the housing market and we had a fall of 10 or 15%, and you've bought $1 million property, that's a net loss or a paper loss, if you want to call it, of 150,000 on a 15% loss.
So then when you lose your job or you decide to move, you're stuck. You can't move because you can't sell the house because you owe more on it than you'll get back.
It has ramifications, right? When you have debt of $1 million or 950,000 and $1 million, because there are costs associated with housing of up to 3 or 5% when you purchase something. The serviceability element, firstly, you need income to sustain that debt. And that's the assumption that debt will remain
cheap
at 6%.
Yeah.
I mean, what we will see, and I think what, the way I view it is we will see inflation run hotter than what we think at 2%.
Yes.
I think the Fed in the US has come out, the Treasurer has come out and indicated that if the choice is between inflation and getting the interest rate or the controlling interest rates, I think they're going to choose the latter and let inflation run a little bit hotter in order to try and get the debt in the US under control. And we tend to follow policy of that nature. We're not in the extremes of the US, but it is very relevant because we're in we're a Western democracy. So if the choice is inflation runs hotter, but they're going to try and suppress interest rates to try and sustain this scenario, how much of a free market do we actually live in? And we've seen that happen in Japan. And so the whole housing piece is, why are we creating this scenario and what does that mean for quality of life? And what are we leaving to our next generations? And if you're not privileged to be able to have parents who have assets, whether it be housing and investment properties, or then you are, a real disadvantage, and that's a shame because, that explains why maybe our birth rates, explains maybe why crime, explains maybe why anxiety and depression and drug use and all these things transpire, and yet we continue to bring in migration at record levels.
Yeah,
it's sort of not making sense to me, and that's, as a citizen, I love this country, but I also am concerned on the direction that it's heading, and I'm not clear on why we're heading there because my parents were migrants, and so they had to work very hard and were given very little, but they built it for themselves. My mother-in-law has lived in her house for 60 years, and she's seen the change and the handouts that go to those who come, and we all need support at some stage, but there's also an element that it's a privilege to come into this country, and we should celebrate that everything we have, and not take it for granted. And housing is really at the core, because if you can't have somewhere comfortable to live and it's affordable, then every other expenditure flows from that, because your discretionary spend is just reduced enormously.
Yeah, and that affects your quality of life. And what you've explained there is that housing's become a store of value.
Yes.
It's Tina, in a sense. There is no alternative. The Australian labourer, average person, knows housing goes up, safe as houses, so they put their money into that. But it's a utility. It's to live in, a roof on your head. And the question that I had upwards of a year ago now, before I found Bitcoin, was that, why do I have to work for 30 years just for the luxury of paying off shelter?
Yeah.
There's something not right with that. And because it's developed this monetary premium with people storing their money in it, that's why housing has become so affordable. Like you said, the government is also putting props in along the way to allow this to continue because they don't want it to collapse.
Yeah.
One, for their own benefit, and we're all incentivized by what affects us and incentivizes us. And then two, because if houses do drop 20%, banks can become insolvent, and that's a bigger problem. And so potentially immigration is looking to replace the birth rate that we can't do.
Yeah.
So it's like, what came first? And I've talked about immigration before, but I completely agree with you and with other people out there that it's a problem. We need to look at it as a society and think, what are we doing and why we're doing it? What direction are we going in? And without becoming an extremist on either point of view, let's look at the facts, and you have the facts. That's why you're here.
Yeah.
So that's housing. If we talk about cost of living and inflation as well, cool. They might say inflation is 2%. You've explained that it's 10%. Monetary supply is 10%. And then we've explained in another podcast that inflation, or CPI, Consumer Price Index, the price of a basket of goods, that again is manipulated. It's not true inflation. Even that's been higher lately than in the past. It's higher than 2%.
Yeah, if you look at, I think inflation is all encompassing, isn't it? It's your day-to-day items that you're purchasing. You look at your energy bills. We are an energy-rich country, and I think I read some data around that we're in the top 1, 2, or 3 producers of pretty much most resources that globally are in demand.
Which is ridiculous compared to our population of 27 million.
It's we are so privileged.
And that's why other countries need us. China needs us. India needs us. Yeah. America needs us to export to them.
Yeah. I'm not sure why our own interests aren't served first. So, my philosophical view is, if we were to serve the country's interests and allow then companies to profit, because I am a capitalist. Don't get me wrong, but capital at play shouldn't come at the expense of its citizens, because those resources are scarce. Believe it or not, yes, we have a lot of certain things, and maybe we have greater supply than demand at this present time, but they will become scarce at some point, and we shouldn't be taken advantage of, or essentially be paid peanuts for these in royalties, if you want to call them any royalties. So that's a concern, and not only that, we have an aging population, and my mother-in-law, my mum, they're paying $300 per month or every 2 months to warm their house, but this is to enable profitability. But then we're sending these same resources globally, and we've got players that are making more money off that. Like, we're not securing our own needs, and I struggle with that, because if that's something we can do, that can make a big difference. And if you look fundamentally at a functioning economy that's thriving, energy sits at the base of it. Good thriving economies have cheap energy. If you can provide cheap energy, it enables business investment to occur and enables pretty much onshoring to occur, because it's a competitive advantage. And so what we're doing is we're disincentivizing this because of the expense of energy. And we're seeing them in different industry. I think we had a major glass provider move overseas recently out of Victoria. And we also, coming from a small business, it's something that's grown in price something like 60-70% over the last 5 years. So if you're running, my wife ran a cafe and I was assisting her, when your cost of energy goes up 50 or 60%,
that's your margin.
That's essentially you are left with low single figure margin, and that presumes that the cost of getting in a tradesman to fix something, forget it, your margin's gone, and that's without having debt. Now, if you're running debt on top of that, like, what's the incentive to be a business operator in that environment? So I'm not sure whether people in government understand, having not maybe worked and ran their own business, that this is the ripple effect that goes on.
Even if they have, maybe it was 5 years ago, maybe it was 10 years ago, things change.
The implications, yes. As things evolve, what does that mean? And as much as you try and put prices up, okay, you can go out and eat at a cafe for $25 of a meal. Maybe you might have done that twice when it was $12 or $15, you might be lucky to do it once because, again, the affordability or the discretionary spend, it has reduced. So the viability of a cafe existing is now being put into question. And yeah, prices are rising, but there's only so much the consumer can absorb or the business can rise.
Otherwise, they decide that it's not affordable. The hurdle rate for me running this business isn't worth it. Therefore, I will shut down.
My advice to my wife was, why are you doing this?
Yeah.
If my hurdle rate is Bitcoin at a compound annual growth rate of much greater than 10%, or we're talking, in 50%, then, and we don't even require that, then why am I doing that? Why are we putting our hard-earned time and energy to get a return in the mid to low single digits?
Talking about scarcity, your most finite asset is your time.
Yes.
So let's touch on, again, focusing on the problems. What are the problems? We've talked about businesses. We've talked about housing. Let's talk about the fiscal dominance and the debt problems that we have in America, and more so in America, I think, because Australia has a very different debt setup. Most of our debt is private debt, which means yourself and me with mortgages and business debt, as opposed to the government's debt. So in America, they have a very high government debt. Did you want to speak to that?
Yeah. I think this concept of fiscal dominance is worth unpacking, and for those if you follow some quite macro sort of people like Lynn Alden or Luke Groman, like they really talk well to this fiscal dominance that's underway and has been occurring. So I encourage people to check them out. But the whole notion is, I think it's broader than just an economic sense. I think it's the concept that the government has solutions to so many different problems. The biggest one in Victoria at the moment, or in Melbourne, is, we had an outbreak of machete knife attack. And so the government's response is firstly to ban them. Well, the knife attacks continued. And the second response has been, we're going to spend $34 million for, I think it's about 65 bins to be located for people to voluntarily put their machetes into.
No CCTV is watching you guys, don't stress.
So it's an example, and as much as I'm picking on that example, but there are many more along those lines that it's as though as a community or a society, we think that the government have the solution to a problem that really comes down to, if somebody does, I suppose, commit a crime of that nature, are the police in a position to hold responsibility and accountability for those once they're caught? And does the court system make it disincentivize it to do that? And that's a question, right? Because I don't see the outcomes like that. I don't see protecting our own home space example. How can I protect my home when someone can just come in and get a slap on the wrist for invading my home? So if there's no consequences to actions, then there's no reason why people wouldn't do it.
The perpetrator is weighing up a risk and reward.
100%.
The reward is I can rob this person.
Correct.
The risk is I get a slap on the wrist.
So
it's a no-brainer for them to do that.
So in countries like Singapore and Dubai, some of the attributes that they have is, if you intend to do that, or you do that and you get caught, you'll be deported, or secondly, you'll face harsh penalties. And that's a disincentive. Now, whether that in combination culturally is an acceptable society,
and there's a spectrum there. You don't need to hit the polar opposites of each, but you shouldn't be letting them off and then continuing to pay their welfare or something like that along those lines.
Well, the irony is that we continue to look for more and more police to recruit police for the police force itself. So yet the powers that they might have and the ability to enforce to get an outcome, as much as they're a deterrent in walking around, the deterrence comes from, if you do this, this is what you. So if you take that risk, the consequence to the action, and that we all live by that. I'm a free markets type of guy, so I know when I put my dollar at work, if that investment isn't appropriately analysed, the risk is I lose half the value of that.
Yeah,
I don't ask the government to bail me out.
Yes,
right. Whether that's investment in a house, investment in an equities, which are shares, or in something like Bitcoin. or any other crypto for that matter. So it's a conscious decision, and yet we have a scenario that we look for mitigating factors, which, they're relevant at times, but at the same time, there's got to be more consequences to actions. And I think that's at the base of any society that needs to function and prosper and move ahead, because we can't continue to have 8 out of 10 jobs that are created in our country in the last 10 years that are public service related.
That means the government's paying for it. The government is funding that wage, that income is coming from the government. So then you're weighing up
So who's paying? How does the government get its money?
Through taxes.
Through taxes. So what have we seen, and what are we seeing being proposed? I mean, the productivity is more and more taxes. The productivity session over the last week was about, okay, what are we looking at? Some inheritance tax, a death tax. We've already seen property taxes here in Victoria. For those who have more than
bedroom tax,
a bedroom tax being proposed.
What about the what was the word of it? It was, let's say, for example, you've paid your house off, because you could have been receiving $35,000 of rent. You now have to pay tax on that unrealized rent.
Wow.
Now these are just. I think it's a scare tactic. I think that's behavioral psychology at play, where let's give all these crazy ideas out there. We won't do them, because then when we actually introduce one, people will accept it with open arms. That's the psychology behind it. So they're not going to do the bedroom tax, and people are like, phew,
but they'll do something
else that screws you.
Yeah. So it goes back to, fiscal dominance or fiscal issues is how are the government functioning? And just to put in perspective, our federal government receives something like, I think it's just under $800 billion in revenue for the past financial year. So you'd say to yourself, so as a country, they bring in $800 billion, and yet they are running a deficit of about $40 billion last year. It's about 5%.
So they're bringing in $800 billion, but then they're spending $1.2 trillion.
I think it's 840 billion.
Right.
They're running 40 billion over. So
40 billion, sorry.
Billion over, yeah.
Okay.
So, and this is, so the expected, so the Treasurer, Jim Chalmers, has come out and indicated for the next 4 years, we will continue to grow our revenue, taxes. Because
how else do they get their revenue,
right?
So they're not making trinkets.
Yeah. The biggest way that is generally personal income tax, and it's called bracket creep. So we all need to earn more, and as we earn more, we go into different brackets, right? So although there's some adjustment occurs to the brackets themselves in taxation, you go into bracket creep where you pay more taxes. So as their revenue goes up, the expenditure continues to go up, or if not more. So our debt expectation, so our we'll be in about $1 trillion of debt as a country, gross debt. Within the next couple of years. Now, I don't know about you, but we are an energy-rich, prosperous, first world country, and we're sitting on $1 trillion of debt in the next couple of years, with the outlook that we'll continue to run deficits, because everybody looks to the government for the solution to whatever problem. If we have a steelworks which can't function in a market-based economy, is inefficient or cannot use its money appropriately, or is heavily debted, because there's some jobs associated with it in a regional area of South Australia, the government will bail them out. Or the government during COVID provides Qantas, I think it was about $800 billion to ensure that our national airline
didn't take stock, take ownership of the company.
Correct.
Just gave them that money for it to survive.
So, and Qantas has since absolutely thrived.
Shown profit.
Record profits. Its market capitalization, its value of the company is at record highs. So,
can I just clarify one thing?
Sure.
So when you say the debt will continue to increase, the deficits will grow, is that because, one, inflation and wage rises in the labour that they're funding, paying nurses, teachers, police officers, unions for creating the Westgate tunnel, things like that, inflation, as well as what else would create, and then giving more and more jobs.
The growth of the federal government expenditure is projected to grow are greater or equal to the revenue growth.
Yeah.
Which means our deficits are continue to rise.
Yeah.
So
But
there's
is
no
that
view
why?
of running a neutral. Well, I think I looked at some data around pre-COVID or in the last 15 years. The size, our population is, and I think it's, when you see government debt rising, the way I perceive it, or I sort of try and relate to it, is for a government to increase its expenditure, a federal government to increase its expenditure by 40% in the last 5 years or so, has our population risen accordingly? Have the services we get warranted because our population warrants them to assist, right?
Right.
And we haven't seen
Because we
that.
pay for them, we fund them, we choose them, we allocate.
It comes with a cost.
Our
That's
money
right.
goes there.
Then there's infrastructure. So, I expect, and I don't expect to be a 1-for-1, right? Because that would be a poor use. So if every person if we grow the population by 50% and there's 100% increase in expenditure, then why are we, what's the reasoning and rationale why we're bringing in so many people? But we haven't seen that. I think the increases in the number of migration has been around 15 to 20% over the last 5 years, which is still very high. I think we're tracking at 600,000 to 700,000 people, migrants being brought into the country.
And you're talking there about, just to clarify, you're talking about the percentage increase of previous immigration to current immigration levels increasing at 20%?
No, increasing it on our population base, total country.
Our total population has increased
about 15%.
15%.
So population up 15%, expenditure up something like 40 to 50%. So why is our federal government, when we've only got a population increase of 15, 16% or thereabouts, growing its debt or growing its expenditure by 40 to 50% over a 5 to 7 year window? That I ask, why I don't think that's a great use of our money. Now, it goes back to we're living in an era.
Investment view, right? And you form that view because you understand investing and you understand the balance sheet. Is that like,
it's also saying, what are we getting as a return? So if we are receiving some amazing services, if our if that money is being put to cheaper energy, like as in we're subsidising to ensure our older generation,
greater
healthcare,
householders, NDIS,
yeah, like it can be used if the return on those monies has led to a prosperous society in both socially, in crime rates being down, in communities being formed, in our capital per GDP per capita is rising, so our quality of life improving per person, then you would say it's a good use. We're heading in the right direction. But we have seen, I think over the last 2.5 years, nearly every quarter, barring 2, we've had a negative GDP per capita return. So in other words, we are getting poorer as a society. Our quality of our life per person has declined. And if you break it down, that does translate on a day-to-day basis. For those who are earning a basic wage and have to rent or vice versa pay a mortgage, ask yourself what's left after that.
Majority of people you're talking about. Anyone
Absolutely.
Under 40.
Correct. So it's really excluding people who are, living with their parents still.
Yeah.
But even if you are living with your parents, how expensive are things? Whether it be, registration, insurances going up, and then you've got, subscriptions or mobiles, and then you've got day-to-day or going have a drink with a friend.
$15 for a beer at a pub.
So they're just real, factors. Now,
there's real life implications to all the. You're very data centric. You're very knowledgeable in what's happening, but these are the real implications you're bringing it back to as well, which is powerful. So, is there anything else you want to add to the fiscal side?
Yeah. So I think what I would ask is, like, think of instead of us looking for the government to be the solution to problems, quite often issues resolve themselves by free market forces. And I'll give you an example of distortion that occurs. So pre-COVID and pre-NDIS, to obtain a cleaner to clean your private residence. I'll use this example because I'm assisting my uncle in having a private cleaner come in once a week. So it's a really good example. It was about $20 to $30 per hour, depending on what
I already know
services.
where this is going because the NDIS has come in. They've said this is the market price for a cleaner.
Yep.
So someone is applying for jobs. You've said, look, we can pay you $30, $40. They're saying, why would I do that when I can go clean the NDIS for $54 an hour?
Correct. So what we've seen is that example that you talk about, when you've got, as much as we're bringing in the immigration quite heavily, and I can see why we might be doing it on one hand because we see a need, what it actually has done is that whole system has distorted the entire market. So now a cleaner for private residence is minimum $50. So it has doubled within 5 years. Now, and then you've got the question of, okay, so why? We're not asking for anything more. In fact, the tools available are probably more efficient to clean. But what's occurred is, if that is the competitive landscape, but it's been mandated, it's actually controlled by a central authority, now that is the market rate. Because you're right, what it is people can compare and say, well, I can get $50 an hour there. Why am I going to go for a 25 or 30?
And they might do your job for a bit until they build up their business and then they go goodbye because I'm going to take this rate over here. That's simple business. That's basic economics and human nature to survive.
So
but you've got two factors:
Yes.
the depreciation of the money and the inflation as well.
That's true.
As well as the government regulation and bringing in a floor in a pricing.
That's right. So that example there does not only go to the cleaners. That then goes to tradesmen. So when a tradesman is quoting a government-orientated task, anyone, it's generally inflated, that price. Whether that be 20%, 30% or 50%, the price that is quoted is much higher. So now what in an electrician, and so for a private resident to bring out an electrician or a plumber, you're competing. And so the rate just to bring a plumber out is a call out of $100 or $150, and then you've got, $80 every 30 minutes from there. So it's a $500 bill or a $400 bill for just getting something looked at. So you've got distortions occurring. Why are we saying, and that is an intervention. You've got a central body, being the government in this case, who's intervening and distorting things. Then you have a central body like the Reserve Bank, who are then, debasing the currency by releasing or banks creating more and more of the currency, which is basically competing for the same amount of goods or assets. So you've got these distortions occurring. So, and it really puts our future generations saying, how do we move forward in this environment? And for those who don't have assets, you're at a significant disadvantage. And that hurts because it hurts.
Which is young people.
It's young people. Yeah.
It's
the future of the country.
Yeah. And so I love this line of thought because when you're a young person and you've got no assets, you're feeling nihilistic. What's the point? Why the hell should I even bother to save for a house when a house, a half decent house, is going to cost me $1 million?
Correct.
And I'm struggling, and I'm on my $60,000 per year job. I'm a single person. Good luck. You can't do it.
Yeah, even you spot. Just do the numbers on that. If the $1 million home in an outer suburb, whether it be
after tax cost,
and you're earning $60,000, you're able to save at least, if you can save 20% of your income or 30% of your income. So your saving patterns are very good. Which is very good on a $60,000. If you can do that on a high wage, you're okay. It's more, but you're talking of, on a 30% saving on 60, that's gross 18,000. If it's 18,000 gross, let's say it's net 15,000.
Yep.
If that price of a home grows by 3% per year, $1 million home is $1,030,000 in 12 months. You're each year you're falling further behind.
The gap is growing and growing and
That's
growing
right.
and growing. And this is a conversation I have with people all the time about house prices. And if you have a $500,000 home and it's growing at 5%, or you've got a $1 million home or a $2 million home, when you're in the $500,000 home, you will never catch the more expensive assets, because as they grow 5%, you're falling further and further and further behind. So if you try to compete in housing, you won't win. You will never catch up. The movement of putting your money in a house and going, I'm sweet, or buying 15 houses and It doesn't work anymore. The times have changed.
Yeah, well, the only challenge there is all the regulation, all the policy, and the dependence on this system continuing is all supportive of the system continuing to roll that way. So we're seeing government policy, like we just spoke about, continuing to reinforce this message. You're continuing to see tax policy, negatively geared, continuing to reinforce this. So all the tax advantages that come with it are still there. So it's not going to unwind anytime soon. So
yeah, right.
The concept of kicking the can down the road.
It puts the floor in there.
Listen, it might mitigate it, but reality is they want this system to go. Let's remember what's at play here. When you transact, a transaction on stamp duty, I think Victoria's got the highest stamp duty in the country.
Yeah,
is anywhere from $30,000 to $50,000 income for the state government. This is an income generator. Let's not get this wrong. So if we see a 20% decline in house prices, that's revenue for our state and federal government or state governments nationally, right?
Yeah.
So
that are already running the deficit.
Correct.
And this is the fiscal dominance that I think we can revert back to now in the US.
Yep.
They want interest rates to come down so the interest repayments are lower.
Yes. So the US is an amazing, always someone to keep an eye on, whether you want to delve in deeply. But Lynn and Luke Roman just absolutely cover this space really well. And I'll try and sort of steal some of their thunder. But the facts are the US current debt is 37 trillion. Their future obligations, so just at 37 trillion. Let me pause there.
It's 12 zeros, 37 with 12 zeros.
And that is growing at $1 trillion per, I think it's something like...
Is it quarter or year?
It might be every 6 months, So they're running a deficit of something like 2 trillion
that's
plus per year, the government are. But the debt is growing at $1 trillion every 3 to 6 months, depending on with all these tariffs coming in, and we'll get to that shortly. So that's just their current debt that they have to continue to refinance, and they're all refinancing on short terms because no one's giving the markets who buy these treasuries and bonds are not interested in long-term treasuries anymore, because there's a real question mark on how this printing that has happened in the US on its serviceability and the continuing. So markets are saying, I don't want to be rewarded at 4%, which is the 10-year treasury, 4.3% thereabouts. I want higher return for the risk because I see more risk now. In the past, that has been sufficient. People have bought that debt, bought those treasuries, bought those bonds. Yeah. But now they're saying we're not buying 10-year treasuries. The market has significantly dried up. There are still some buyers, but we obviously know, countries like China are no longer. In fact, they're a seller of treasuries. So they're
I'm wary that we could be losing people with this line of thought, but what you're saying is absolutely appropriate. And what you're talking about is a hurdle rate. Again, it's investors in US government debt, which is our pension funds, our superannuation, sovereign nations around the world buying these assets, these US treasuries, and they're saying...
But I think the key point I want to stress here is this amount of debt that continues to need to be refinanced, it doesn't go away. The numbers are the numbers. You can't just go to sleep on it, right?
It's going like that.
You either default, which is a whole new, which they won't, or you print your way out of it, essentially. And the printing is what they've done, just like we have done, right? But we're not in as much debt as a percentage of our size of our economy, our GDP.
And we're talking government debt.
We're talking
in America,
government debt, federal government debt. So the implications on the 37 trillion are that that needs to be constantly funded, right? Because they can't shut down. It's still the biggest market
of the economy. They can't turn off the US war machine paying for defense.
That's right.
They can't turn off
welfare. Welfare. I mean, the four biggest expense lines are defense, Social Security and Medicaid, and then you've got interest.
The interest on the debt they already have. They're paying $1 trillion.
Over $1 trillion.
Our level of debt, they're paying that every 6 months.
Yeah, that's correct. So that's rising. So that's in interest. And so what the government now are looking to do is they've got a decision, and Powell came out, which Powell is the Treasury, so essentially like a CFO of a company. He came out over the last 7 to 10 days and indicated that if there's a choice between running inflation hotter and bringing down the interest on the debt, he's going to choose running inflation hotter and bringing down interest. So now it's got like yield curve control. They're going to force interest rates lower. So they've been on a consistent questioning of Powell, which is an independent, the governor of the Federal Reserve, challenging him around, why aren't you bringing interest rates lower? He will be turned out over the next 6 to 9 months because his term is up.
They'll get rid of him.
And their appointee will be someone who will do yield curve control or thereabouts.
And that is the Treasury printing money to make sure that interest rates come down.
And control
where
they be.
So if other countries try to sell their debt, that would generally raise the interest rate in America. But then the Treasury will come in and buy it and put a stop so it stays low for people.
Which is what Japan's done for the last 30 or 40 years.
Right. And so without getting too into the numbers,
That's right.
we're talking big picture. These are the problems that are facing everyday people. It is way more complicated than, it's just immigration.
Yeah. So just to bring it back to a bit of a real life scenario, by taking that approach, and if that's the approach going forward for the next 3, 5, 10 years, what we have as a situation is that as an investor, as someone who wants to protect their purchasing power, with so much money being printed to keep this situation continuing, it means you need to place your money or have assets that can match the inflation that's going to come. And again, I'm going to go back to the real inflation rate I would call out is the debasement that is occurring, which is the range of 7 to 10% a year. So if you go to the higher end, the 10%, that is your hurdle rate, your base hurdle rate. And because that is the likely amount of debasement or printing that's going to happen.
So if you keep your real life, if you keep your money in the bank and it's earning 5% interest, Jerome Powell is telling you that's going to come down. It will no longer give you 5% return, and you're competing with 10. So if you keep your money in the bank, you're going backwards.
Yeah.
And so it comes back to what is money, and not only that, what do we want it to be? Because there's a course I've created around the history of money and investing.
All right.
And the history of money has evolved. Money has changed and will continue to do so.
Yeah.
We've got 140 odd currencies that have already died and gone to nothing.
Yeah.
They've failed. Our currency now is the Australian dollar. We know it as coinage and notes, and now it's mostly digital, seen in an app.
So let's just on the Australian dollar. It's important to recognize that the dollar that we have, there's more of it in circulation. Fact. Our dollar, go back 50 years, so 1975 or thereabouts, the dollar purchased far greater than what it can purchase today.
Fact.
So whether it's you looking at...
There'll be a graph there right now.
Yeah, that's right. Whether it's a housing comparative, and that's an important one, I think it's a real relevant one, or whether it's, purchasing a bag of lollies or some milk and eggs, those things are clear comparatives. So I think your point around what constitutes money, well, the Australian dollar has one, but what we're seeing and what we've seen historically is that as countries and civilizations evolve, those in control, the central authorities in control, and what we're talking about here is governments, they continue to debase because it's a form, it's easy and it's lazy and it's a form of theft.
They'll do that because it's easier to just do it and debase the currency rather than tell people we're going to tax you more.
It's a subtle,
even though they're
subtle
doing
theft.
They're doing it both. Yeah. They're taxing you more
100%.
and then inflating you.
Yeah. It's a subtle theft that continues to fly through. Just look at all the forms of taxation that are occurring, and inflation is one of those. They talk about inflation as though it's not in control. Well, when you keep printing at 7 or 10%, you can control that. Economies that haven't done that, or countries that haven't done that, have much more stability. They're running much more disciplined methods, and this all leads into Austrian economics.
Switzerland, I was going to say, for example, they have the lowest inflation, and if you look at their dollar versus the American dollar, it's phenomenally
Held.
outperformed
Yep.
because it holds hard assets like gold, right?
Yes.
We're talking now about, we haven't even touched on Bitcoin. This whole time,
Yeah.
we're Bitcoiners.
Yeah.
We've been talking about the problems.
Yeah.
Understanding the problem is fundamental to then seeing what is a potential solution.
Yeah, but if we talk about, I think the money thing is, so we know it as the Australian dollar. We know fact it's been debased, or there's a lot more of it in circulation in any period of time, and it'll continue to be more into the future. So if you are somebody who's looking to get ahead, if you are saving in the Australian dollar, and the facts are that the government and the Reserve Bank of Australia will continue to print more to fund these deficits, then your dollar purchasing power will decline over the next 1, 3, 5 years. So therefore, your choice is, do I keep my money in cash or a term deposit, or do I put it in an international equities or Australian equities, which are shares and ownership in companies which have worked on an average of around 10% a year or 12% a year? Or do I look at other alternatives such as housing, and will that perform and match that debasement or that printing that occurs, or that inflation that I refer to? Or do I look at a strategy like having exposure to Bitcoin or learning more about Bitcoin? And I think as we go through our discussions, I think it'll be pretty obvious on where you should put some time and energy into, because we work so hard. We work so hard, at least 40, 50 hours a week. And if you're running your own business, we're talking 60 hours a week. I encourage us to spend some time to learn about money.
How to keep it, how to keep that money that you
That's
earned.
right. So learn about and how you can preserve the purchasing power of it. And it's so fundamental to prosperity for you as an individual, your family, generations, but more importantly, the globe, and peace and prosperity, so we can actually humanize things. There's a lot of hope that exists in that space.
So I saw a video of Drake, and he opened up his vault and he had like hundreds of thousands of notes in there. And I just thought, okay, that's a bad idea, because it's going to inflate away to zero. If he's got it there because doomsday happens, he's got cash, cool, that's okay. But so many people around the world don't understand that you cannot store the money in money. So on that,
or you can
line of, you can, but you're going backwards. You go to zero.
But you just got to realize there's nothing wrong in taking. You got to remember what the system at play is telling you. So all the norms that we've all grown up with is, this is the playbook that works. You work hard, you save a portion, you
buy a house,
you then borrow a lot of money, or borrow money, whatever multiple of your income, to purchase an appreciating asset, being a property generally. Because shares are a relatively new phenomenon, and many
they're
people,
scary.
They're volatile, right? And we haven't even talked about cryptocurrencies or Bitcoin. So and then you lever yourself, because all the incentives are around that, and the government benefit because they're getting all the tax revenue from those, and the asset price appreciating, and you get those benefit, and you feel richer, which then means you spin and the flywheel continues. But the question is, can that continue, and how much, can we get to the average property in Melbourne or Sydney being 3 million or 2 million, and Melbourne being 1.5 million? I don't know. I don't have a definitive, but what's the saying? The harder you stretch the
elastic,
the more severe the break is, because when you stretch so far, the reaction is going to be more severe.
If you just happen to get the timing wrong, which is completely luck, you'll never know. You don't know. I don't know what's going to happen with housing into the future, or any asset into the future.
But I think it's understanding that could work. It's that asymmetry, I think, again,
the risk
out
asymmetry.
Andrew Page on this one. The asymmetry, the upside of investing into a property that's negative yielding, in other words, just on the core interest payment on what you yield is negative.
What a ridiculous premise!
It is, you wouldn't do that with. It's a phenomenal presence on the reliance of the capital appreciation. with so many variables there, the upside might be, a 5% per annum or a 7% per annum. And that might be sufficient for some people because it's, they might already have equity or they might have that exposure. So for some people it might work, but will that maintain your purchasing power when debasement or currency printing is at 7 to 10%? So essentially, what I am suggesting and what we'll, I'm sure, unpack is there are strategies that you can employ that you essentially are jumping on the fastest horse in the race. And what does that mean? It means the property of a price, the price of a property is actually cheaper as time goes on because the appreciation of an asset class such as Bitcoin is so much greater than property, shares, cash, or any other investment.
Yeah, what you're talking about here, from what I've gathered, is risk. Like everything carries risk. You keep your money in the vault, there's a risk attached to that. Inflation happens. You keep your money in a property, there's risk attached to that. Does it go up? Does it go down 40%? You've made that choice. Don't lie to yourself and say that, I don't invest, because everything you do with your money is an investment. Putting it into the long-term savings account, that's investing.
That's your choice. Yeah, that's right.
Saving and purchasing a house, that's investing. Putting it into the stock market, that's investing. Going to the pub, you're investing in your happiness and your time with your mates.
Yeah, that's right.
So you are investing, and there's different levels of risk attached to every single one of those options. So now I think we can get into your journey and my journey on how we view this is how we view the world. We've recognized those problems that we've just
and we're all battling these in different ways, different bases that we see.
But I think because we had our journey, 2-3 years ago, you and I are personally battling with those realities of the world far differently to the average person, because we recognized them and we decided to operate with our money in a different way.
Yeah.
And you have for a significant portion of time invested and understood investing. So in terms of your personalization, what is your thinking? You've talked about your hurdle rate.
Yeah.
How did you come across Bitcoin? That's going to be our first part of this. And then we're going to go into the technology and the clarity around what Bitcoin is, why it exists, and distilling myths, and as well as promoting the facts to it. But we're just, for now, going to discuss our personal journeys on it, because I think ours has been very different. I might lead first with what I did, and then I'll ask about you. So when I came across Bitcoin in 2017, dismissed it. 2018, dismissed it. I don't want to talk about it. I don't care. It's a Ponzi. It's stupid. That's what I told people.
Yeah.
We met 2 years ago, and I think I probably said the same thing to you. Or I was very confused as to, I was like, but doesn't it continue to inflate? Like, doesn't that just inflate too? Like the nominal bias, not understanding the scarcity of it enough. I dismissed it. The ETFs got launched in America, and I went, regardless of what I think of this asset class, because of this fact, it's going to be in the American markets. Money will flow in regardless of whether it's right or wrong. Therefore, I will buy some. And I put, some money into it, a significant portion of my savings into it, and then started learning about it. Then read these books. Then from there, the more I read, the more I realized the problems with the world. I just dumped my entire savings into Bitcoin. This was midway through last year. And in that time, it has doubled and my conviction has grown. But my conviction was like, I don't care. I'm not playing in that world anymore. I hate it. I don't agree with it. It has horrible outcomes for people, individuals, and I refuse to participate. I was screwed over in the stock market in a couple of penny stocks, trying to make my money work for me, trying to invest and realizing that there's manipulation. You're at the mercy of one person who can do something or say something. And then there's people behind the scenes that know more information than you, the insiders, and you'll never outcompete them in some aspects. It doesn't mean that you can't have an asymmetry and make money. And I still do participate in those markets. But for me, Bitcoin was the thing where I was like, this is this is the one true pristine asset, and I can stand behind it morally, ethically,
Yeah.
economically, incentives wise, and be content, even if it goes to zero, that I'm content that I stood behind an idea that I believed in.
Yeah.
That was my journey on it. And I continue to buy Bitcoin to this day, even though it is at 170,000 Australian as of today,
Yeah.
and it was 186,000 last week. And 6 months ago, it was 110,000 Australian.
Yeah.
So your journey, I'm assuming, is going to be a little bit different to mine,
Yeah.
because it was a much lower price when you first jumped in as well. So did you, whatever you want to share with that?
I'll probably go back even further. I think I mentioned earlier in previous episode, if it is, or just earlier in the session, that I've always been someone who wants to get my money to work for me, as I was a saver, because my mum did do it hard. So growing up, it was a lot of what we didn't have and I saw others have. And you sort of say, why is that? So you sort of, that incentive and that drive to sort of always, if you can save and then put it to work and learn that's a strategy, live within your means and put it to work, does help. It was never, debt came on the scene when sort of property got involved, and because I was an investor in property and when I was younger days, and that appreciated over time. So similar to you around equities, you're trying to, when you're investing in shares, that became of interest because shares is quite and continues to play a portion of what I do, but a lot significantly small portion comparative to my
Getting
time.
smaller and smaller because of the gains and
just my time as well, and the energy that it consumes. You know, I could have a small investment in a company, and just to keep up to date with the information and the analysis around it, you know, it requires many hours. And if I replicate that across, let's say, 6 to 10 companies that I have as a following, that takes time and energy. And that's the beauty of Bitcoin. When we get to the attributes that it has, it's
trustworthy.
There's real simplicity behind it. And I think that's a real strength of it. But just my interest in equities, because Bitcoin didn't even exist. Like I said, I'm a 51-year-old. So going back when I was 18 and in my 20s, and, getting real exposure to the share market, it was something real exciting and real high energy and something I want to explore. So like we make mistakes and you want to make them early, and some of them are more significant than others. And then you have some, good outcomes. But as I matured and sort of got into my 30s and children came along, your perspective of the world changes a lot, right? And your future, you sort of say, okay, what is that going to be looking like? And how can we provide a world that's better for them? You sort of look for, okay, what is the formula in shares that you can sort of look for that can give you the difference to think not short term, think long term. So I wasn't looking for the price to move by 5 or 10% in a week. I'm looking for, doubling or quadrupling over a period of 3 or 5 years. So you start looking at that. So a lot of the attributes that I learned in basic business economics functioning really has formed the basis of what I'm looking for as a good investment, an investment strategy, like we talked about originally. So, when Bitcoin comes along, I never gave it the time because I never thought of it just like a company gets created by people, because that's what a company is. It's a group of people that have something special that they're working through, and it can be profitable. It's moving to profitability with growing margins. Bitcoin essentially something created by people. It's a community of people. You might see a gold coin or that, but it actually isn't a gold coin at all. It's just it's a ledger, and you have access to a portion or a multiple number of Bitcoin because you went and purchased and you've got a right to that, or that's access, and you're the only one with those keys that have access to that portion. So the attributes of shares really enabled me to look at an investment strategy. And I came across Bitcoin 2016. A friend of mine, or my son, was playing soccer, and a dad was sort of into it and said, "Come have a look at this." And me thinking I was really cool, just pretty much shat on it.
Yeah.
You know, and
Especially coming from that business mindset that you were, and investing mindset. It's a
Yeah.
really common way
very
to come at
close-minded.
to
Yeah.
come at Bitcoin in exactly the same way as
Yeah.
I did.
Very close-minded. And I look back and, you know, it's unfortunate because we all would have heard about it around that period and even after that.
Mm.
And it really wasn't until my older son sort of, you know, in 2019, 2020, we sort of sat down and had a chat about it. He explained a bit more. I sort of said, you know what, I'll go have a look at this. And so I had bought some exposure. It generally was at the highs because things were running hot. You know, the number go up concept is very relevant where, you know, people do prick their ears at appreciation of the price of Bitcoin, or more importantly, the depreciation of the currency that you're dealing with, whether it be the US dollar or the Australian dollar. But yeah, that makes a big difference. But looking at its attributes is what really started to appeal to me, because when you don't have a central authority at the helm of something, that means you're taking away someone to just rug pull it.
Yeah,
if
the
you wanna call it.
centralization
Correct. To make a decision that's contrary
to your beliefs and your ethics and the reason why you got
absolutely.
involved in
Yeah,
it.
yeah. And for whatever reason, they might do it. So just think about that for a minute. You know, the government can come out and come and say, we are now going to tax you on your third and fourth bedroom because you don't use it. You know, $5,000 a year. That's exactly what they did with second homes. So people who had a holiday home on the Mornington Peninsula for decades now pay 20, 30, 40,000 a year in tax because the government just did.
Because they said so.
Because they said so. So that's essentially a rug pull, right? So you never bought it for the intention for it to appreciate to, you know, whatever price it is today, although that was a part of the equation. It was the enjoyment. It was the fact that you went down to the coast and enjoyed the warm days that existed, and you're fortunate enough and you took that risk. And the reward was you enjoyed that time and effort with your family.
So that's not a free market, right? And I mean, let's be honest, you also probably bought it for the store of value behind the thing too. But that's free markets. So when we talked before about the machetes, the black market is the true free market, because if you really want something, you can go on there and you can find it.
Well, the reality is the people who have machetes and using it for those reasons are never buying through legitimate purposes,
And they don't care.
and they're never gonna buy into the system of putting them into the bins, or very few will.
Yeah.
Like it's quite laughable, right?
It is.
I'd like to think our taxpayer money can be used more effectively to sort of recognize what a strategy is going to work and isn't. And, you know, someone should be held accountable. And this is the other thing that goes back to, there's got to be accountability for a policy of that nature, and why it was made and why $34 million was spent, and what return we got out of it is in the sense of that, are we safer because of it? You know, is this transpiring into us as a community, as a state, being in a better place?
I haven't heard one person say those machete bins are a fantastic idea, and they were a centralized idea. Someone created that and then did it, and we didn't get a say in it.
Yeah.
But with
It's a
Bitcoin,
knee-jerk reaction. Yeah.
back to Bitcoin, it's decentralized in its functionality, in that the network together decide how it operates. But let's go back on the train.
I think so. Looking at the attributes of you know, investing into companies, you can take a lot of those, and like I said, the experience that you have where you've invested into, whether it's $1,000 or $10,000 into a company and it's fallen by half, which hasn't got prospects, because most companies really struggle. It's not easy. Business isn't easy because there are competitive factors, regulations, and, you know, they sell a story, but it's really hard to deliver. So when you lose half of your capital, you learn some really hard truths, hard lessons, and those stick with you. And so when you're building over time, you're building, okay, what is a strategy? One element of a strategy is that you don't want centralization, or you want to be able to trust strongly, and there's a record of trust in that CEO or that management group.
Yeah.
And in Bitcoin's case, as an example, there is no need to, you don't have a central point of failure where somebody can change. It requires a lot of consensus, and it requires a lot of agreement. And that's the simplicity of Bitcoin. I know we're going to talk about some of its attributes in a few minutes or in some time, but the attributes that it has gives me a lot of comfort, and that I don't need to worry and stress in the value of what I've bought, because its attributes hold true and it's very hard to change. And I think that needs to be respected. And every day that goes by, I see little reinforcements of that on my strategy being a tick, if you want to call it. So whether I wake up in the morning and to have housing affordability, we're going to, provide people 5% deposit with no mortgage insurance and relaxing of the laws, that really is a reinforcement of why I'm doing Bitcoin, because all that is that more money is coming into the system and we're not really addressing the real problem, and the problem's going to continue. So therefore, as more debasement happens, more currency occurs, more money will flow into Bitcoin, because it's the hardest form of money ever created, because it has true scarcity. And smart money and high wealth net individuals, as well institutions, we're seeing a lot of adoption, or a lot of money flowing into it. And I see that continuing. And we are very early in the phase.
So your journey on it, then you realized these aspects of it.
Yes.
And then you decided, what? I'm going to buy some.
So, yeah.
And then it evolved to you buying more.
Yeah, correct. And again, it's like anything, take a position, learn about it more. You have a vested interest. And that grew. That grew in sort of 2020. And then continues to grow now. So what you're saying is, I'm a purchaser of it today. I've mined Bitcoin over the last 18 months and continue to be a miner to a lesser degree today, because I was interested in learning about the mining aspect of it. I'm a node runner. So I'm someone who sees the protection of the network as being fundamental to how it works. So we might touch on that in future. But from a personal point of view, my savings that I've been able to do has been redirected into an asset that can't be debased. So,
because it's finitely scarce.
Correct.
There's 21 million.
Correct.
It doesn't matter what portion of it you buy.
That's right.
No one's going to print more on you.
That's right.
No one's going to change the rules. No one's going to change the deposit limits. No one's going
That's right. And it's meant, the way you can analyze and understand it is its adoption rate is growing. So it parallels of things like the internet, or something like Facebook adoption, or the Instagram. So they go on curves, or S curves, or power law curves. Their adoption rates, and all you don't need to know that detail, but the adoption rates are growing. And as long as the adoption rates are growing and its security of the network remains true, it's an asset that I want to own more and more of. And so, our family has moved to put pretty much 80 to 90% of our, investable monies into Bitcoin. And we continue to do that and want to preach that and give people hope that that is something that will be generational wealth and prosperity in many ways, not just economically, but in decisions. So by doing that, myself and my wife have been able to, when we sold our business earlier in the year, be able to not have to enter the workplace. And so our workplace is about, reading and educating ourselves more, but also looking at investment circles and speaking to a lot of people about our journey, but also about Bitcoin being something that really gives you low time preference. In other words, really gets you to think more broadly about what's happening and thinking long term. And I think we've done that. When my parents came, they had to think long term and had to be stringent and do the discipline thing over time. So I think we've lost our way a little bit like that.
As a society?
As a society, yeah. We're very short term and we're really, we've got to have a solution to this, but we're not addressing fundamentally what's really wrong at the base layer.
Yeah.
So my journey is around, I'm someone who believes in its benefit to society. And I think, us as a country, if we were to look at adopting Bitcoin in some way with our superannuation, allowing that for major funds or sovereign wealth funds, we would be a country that could enormously benefit, like countries like Bhutan and El Salvador are doing, who are small and needed to do it. But, they're going to be the biggest beneficiaries because we are very lazy in our thinking and we think we don't need that because we are very fortunate. We're very lucky, yeah. We are, talking to a lot of people, they don't even understand the need for it because they can go and open up a bank account.
Yeah.
So I think my personal, adoption of Bitcoin is strong. Conviction of it is strong, but I also am enjoying the way I'm as a person, and I'm able to spend time. My uncle isn't well. My parents are in their 80s, so we're spending time with them and learning about them growing up. So we're able to spend time with people we love and time with my kids, and I think that's healthy for society. Like, I'd like to think I'm contributing in the right way because I want us to do the right thing to have a great country and the best country, globally for decades to come. But, as we talked about the problems earlier, we've got some challenges, right? If we keep going the direction we are. And
so we need to find a savings device that makes sense and stores value over time. You found it, and it's given you the ability to have freedom and choice in your life. That's all it comes down to.
That's the key.
Yeah.
So, ask yourself what you spoke earlier about what is finite. That is time. Your time is finite. And, what are you going to want to do at 65 and 70? Your ability to travel, your ability to enjoy things at those ages are different to what they are when you're 50s or your 40s or your 30s. So having the balance is critical. And, you see so many people retire into their late 60s, but they're quite ill. They don't have the ability to enjoy much.
You need an investment strategy regardless of whether or not you invest. So we talked about that, whether you keep it in the bank or the investing or Bitcoin or a house.
Yeah.
So practical steps. My practical step was read all the books, dump all the money in. That's not for everyone. That's not normal. That's not a normal approach, and I fully recognize that.
Correct.
So some other practical steps might be, do you have advice for people?
Yeah, like I would say, if you have a investment strategy, ask yourself, is something like Bitcoin, can it fit in? And I would say, if you have a savings mechanism, add this to your savings mechanism, and what they call is, averaging discount,
dollar cost
averaging, DCA.
Yeah.
And all that, that's a simple thing, whether it's $10 a week, $20 a week, $100 a week, whatever someone can afford, start that process. Because one thing that's amazing about Bitcoin, it's divisible. One Bitcoin is divided into 100 million Satoshis, or sats, as we call them. And so you can buy a fraction of a Bitcoin, and you'd be surprised as the price appreciates, the value appreciates accordingly. So, buying $10 today, in 3, 4, 5, 10 years time, you might see it doubling in price. And if you've continually bought that at different price points, it can make a material difference, 100%. So
practically speaking on that, there are ways you can do that. If you're looking at an ETF, whether you start a ComSec account or a superhero trading account, there's differences there. I have talked about them before, but the ComSec account, you're going to be paying brokerage. So if you are, practically speaking, going to make a $20 purchase and you're paying $5, $10 brokerage, it doesn't make any sense. So practically speaking, you want to, whatever savings that you decide initially I'm going to start with, $200, $300, $400, $500, create this ComSec account, buy the ETF, Google it, IBIT, IBTC, there's a few of them. Then start learning about it, then watch it, then track it, then you're incentivized to learn about it. The only way to start is to do it that way. Otherwise, you will never get started. It's scary at first, but look at that $500 as an investment in your education and learning about it. That's how I suggest to people to start if they want to start.
So I'm a self-sovereign person.
Right, which means what?
So sovereignty is very important to me. So having choice on where I'd like to live, how I want to conduct my finances. To me, that's something we've earned as a family, and I want to be able to choose how I buy my Bitcoin and how I store my Bitcoin. So I would encourage people to learn about that process. It isn't as difficult as what it seems. I'm not a tech guy, so please don't think. But there is so much information out there around being able to purchase. It's simple as from your bank account transferring money to some exchange like a Bitaroo, which is a pure Bitcoin play.
Getting your account blocked, solving that problem, that does happen.
Yes.
It does happen, but
limits on that. Yeah,
it's easy to fix.
Yeah, correct. The banks will always say to you, you haven't done this before. Are you sure this could be a scam? And they come from a genuine place. At the same time, ironically, they're not as secure as anything else. But once you overcome that, if you get your $5, $100, $500 across into Bitaroo, you can set up a constant purchase of Bitcoin, or vice versa, just do a one-off and do that on a weekly, monthly basis. The benefit of the self-sovereignty is, firstly, your fees that you get charged are really minimal, and you actually are able to then move that. Think of it as money in your wallet, which is the exchange, and then money in your account. So then you move it to a cold wallet, as it's called, and that is off the exchange, where it requires more security, which is a PIN or in this case a 12 or 24 seed phrase that protects it. And the beauty of having something like that set up is, over time you keep adding to it. It's the natural thing of compounding, right? As you just add small amounts.
Yeah.
And we know the scarcity of it. We'll talk more in detail about those attributes. But as the price appreciates, the value of what you hold. And I remember someone saying a few years ago, I can't remember, I should find the quote of it, but value Bitcoin as though it's 10x today.
Yeah, yeah.
So
in terms of how you secure it, how you treat it.
Yes.
Right.
So let's take that. Understand that. So if it is $170,000 Australian today, treat it as though it's 1.17 million per coin. So why? Because that's exactly what it's done over a 4-6 year period.
Yeah.
It's 10x, basically what they call this per cycle. Now, will it repeat itself? Listen, I can't. None of us can. But history tells you where it's at. Now, it might be a longer cycle that it does something like that. But if you have the view like that, then you treat it accordingly. You are securing yourself, your family, and future generations, and then you will learn more about it, and you'll spend the time to learn more. And that will naturally happen. It's naturally happened to me, that's for sure.
Yeah, yeah. You become addicted to it if you find value in it, and if you buy it and you don't find value in it, so be it. That's the ability of a free market and a self-sovereign individual to make choices with what they want to do with their stored savings, their earned money.
Just understand that Bitcoin is the 6th, 7th largest single asset class. When we consider gold at sort of the top at 22 trillion thereabouts.
Yep.
We then have the mega caps, Nvidia above that, and then you have Microsoft.
So on that, in terms of gold, people will often say that there's nominal bias in that I've missed it. It's 170,000. I'm too late. Damn it. I heard about it 10 years ago. Damn it. I thought that too, but then I had the conviction. You will have to find the conviction somewhere. So in terms of how can you distill the myth that you're too late?
Yeah. I think Bitcoin is, I think you mentioned it earlier, how it flips things on its head. So when you look at traditional finance, or which people call TradFi, if you hear that phrase, or share market investing or investing generally, the higher the price goes, the risk return is reduced. So the risk rises and the return notion falls, right?
Yeah, the idea of it going to zero is almost out of the picture now, whereas 5 years ago, it could have gone potentially to zero at a $200 to $500 billion market cap, maybe. But now, with Wall Street adoption, $2.3 to $2.4 trillion asset,
Yeah.
It's less likely to go to zero, and the volatility is lowering too. The big spikes, the big 50-80% drawdowns, I think are gone.
Yeah. So Bitcoin has this innate way, it actually flips traditional finance on its head. And so when we're looking about, if you're looking at purely on a graph of price appreciation, like we all want to invest into something that has price appreciation, right? Let's put that clear and out on the table, no matter who you are. It's just human psychology, right? So put that to the side. When you're buying any traditional asset, a property, when you're buying something like a stock or a company, and it's trading on a multiple of its earnings, and that multiple is far higher than what the average is. So Nvidia is a good example. That might trade at, say, 70 times its earnings. So in other words, it will take you 70 years at the current rate of earnings per year to get all your money back that you're paying, when the average is 16 or 17. So you're paying overs the entire average, right? So it's higher risk. So your probability of getting greater returns requires Nvidia to continue to outperform. Now, the whole chip industry, I'm not clear on that. AI is evolving, clearly high demand, and it's priced accordingly because it's a big beneficiary. How long that continues, time will tell, right?
And let's just go back to the government for a second. They can just come out and say, hey, we're going to invest in American-only chips. Here's $500 billion. All of a sudden, Nvidia goes, oh, that's our main buyer. A centralized entity has made a decision and it has cut the market cap of that company. Now, it hasn't, but it could.
Absolutely.
It could cut it 20%, 40%, 50%.
China could have a chip maker who they haven't made clear that is a clear competitor that will eat their market share because their dominance will... Now, it's very hard. Like what they've created, what they have is something very special, and that's where it sits today. But conditions can change. You mentioned before, conditions can change. So as an investor, I've got a choice. I can either not sit and play that game at all, so leave that investment, or I can play it and I can say, well, I expect that to continue. But my returns, I will be honest about saying they're probably not going to be a doubling and a tripling like we've seen, or quadrupling like we've seen in Nvidia historically. Why? Because trees don't grow to the moon. It just doesn't work that way in traditional finance. Bringing it back to Bitcoin, what we've seen in Bitcoin, for those who have followed it for a number of years, and the good thing about today is it still presents itself as a great asymmetric return, is that as it's grown in price and its size grows, it attracts different pools of money. And this is really important to understand. And this is why we're still early on the journey, that it's tapping into now huge pools such as the bond markets. So the markets that fund the US governments and fund governments globally,
insurance company,
pension funds, company treasuries is now coming on the scene. So, companies that have cash on their balance sheet, instead of keeping that cash, that money in cash at 2%, 3%, some of them are allocating a portion to Bitcoin because they see that appreciation or understand it better. And there's some pure companies that have been created just as Bitcoin companies. So you're seeing this evolution in traditional finance that hasn't really been challenged before. And so we have been really early, in other words, yourself and myself and many who have been in the space, and those,
and felt late. When we entered, we felt
you
late.
always feel late.
Yep.
Let me make that clear.
And you buy it?
When I've been able to purchase small parcels of Bitcoin at 23,000 Australian, I felt late. I felt it was expensive. I felt it was expensive all the way through as my purchases occurred. And I feel that today it's expensive. But what you realize, the reality is that Bitcoin continues to tap into different pools of capital. And if we go back to our principles, and that is, what is money? It is becoming a form of money. It's not just a store of value. It's becoming a medium of exchange.
It's not a currency. It's not something that can be printed. It's the hard underlying denominator of the fraction.
So a medium of exchange, in other words, who just came out? Jack Dorsey of Square, right? So he's going to enable all the Square terminals globally I should turn them on, at intervals to transact in Bitcoin. So, and he's a Bitcoiner, and someone who's, positive and a contributor to the. So
just some background on Dorsey real quick.
Yeah.
He was one of the inventors of Twitter. Twitter was based around the idea of free speech.
Yes.
That's why it's impactful too. Free speech, and he's saying Bitcoin is free speech as a money. That's why it's relevant.
Absolutely. I think he's behind Nostr, which is the Twitter equivalent. Decentralized. It's not a centralized, because remember Twitter is owned by Elon, and at any stage he can just shut you down. So so going back to Bitcoin and how early we are. Well, yes, it has appreciated, but like a saying goes, there's still much more upside to come, because when you look at the asset class or asset classes globally, the pool of money that we're sitting on or is available to be tapped into equates to around 900 trillion to 1,000 trillion. Bitcoin's market capitalization, as you mentioned, is 2.2, 2.4 trillion, thereabouts. It sort of jumps around a little bit. So it's very early. So
it's 0.2% of the global assets available. 0.2%.
The way I explain is my first target is something I would look Bitcoin to challenge is gold. And gold is a 22 trillion. Now, gold will continue to grow as Bitcoin grows, but I think Bitcoin's rate of growth and adoption, because of its adoption, will be faster. So in other words, 22 trillion, it's got the ability to 10x from here as the first target mark. Whether you're a Power Law subscriber or whatever it might be, what period of time, I suspect that will occur in the next 10 years or so.
So if you compare Bitcoin to gold, 2.2 trillion, let's say, versus 22 trillion as the size of the asset class, it's like a toddler when they start growing. They have the ability to grow quicker than the 20-year-old. The 20-year-old might grow 2 inches, but the toddler's grown a foot, 2 foot. And
that's a great analogy.
Because it's so small, it has the ability to grow bigger. That's the S-curve adoption. Once it gets to the top, it cannot go any further. Gold at 22 trillion, maybe it doubles, maybe. That's going to become 40 trillion out of 1,000 trillion.
Well, it'll be a whole lot more than that by that stage. Yeah, that's right.
So, but Bitcoin can 10x because of its scarcity.
Yeah.
Gold is inflating. They discover more gold each day.
So you've got the last cycle that just happened when we halved the Bitcoin subsidy, and I'm sure we'll get to that later, but has now made it more scarce than gold. So we flipped gold, and gold has the ability, you can turn more gold on. I mean, it is harder to extract that process, but it became more scarce than gold. Now, that'll continue over as each four-year cycle continues, where it halves. And I think the price accordingly will rise.
And the volatility continues to dampen on that because there's less Bitcoin being mined and forcibly sold to keep the mining operations running. So as it continues to halve, this is why the Bitcoin gold rush, according to Michael Saylor, from 2024 to 2032, by 2032, every 10 minutes, a miner solving that algorithm, solving that puzzle, will be rewarded with less than 1 Bitcoin, which means that's a third of what we are now being mined.
That means 99% of the Bitcoin's been mined.
Yeah.
Because it's only 1% left.
Yeah.
So, it is. I think Jack Dorsey's a real strong belief is it needs to become a medium of exchange. Now, for many of us, it's been a store of value and will continue to be. The medium of exchange and what's being built on Bitcoin is another fascinating, I suppose, topic and of interest to, really open up, because I think we underestimate the investments that are going into Bitcoin on the second layer and third layer. So our traditional finance system has layered approach. So we have the base money or Fed wire sitting at the base, and they have multiple layers. And things like PayPal and MasterCard and Visa all sit at different levels, as well as the banking system. So I think at some point it's good to go into how Bitcoin will challenge that system of play.
Go for it.
It's sound money, right? So when you're dealing with pure scarcity, it's not a fractional reserve approach. Now, could that change? As in, are we seeing products evolving that involve, not rehypothesizing, like not giving someone your Bitcoin and then they sell it to someone and it's just like a dollar gets loaned out, or gets created and get loaned out. It's more around,
That's been a problem. That's why gold was useful. Even though they've only got one thing of gold, they've lent out 5
That's right.
certificates. We need a central bank entity that can make sure that if people want to get their gold out, we can print some more paper certificates, lend them the certificates to make sure that we don't have a collapse and a bank run, because that's a bigger problem. That's how central banks were actually created, early 1900s.
That's the purpose. That's right. Yeah, in the 1900s to assist with that. So I think
that's a problem that Bitcoin solves.
Yeah. So Bitcoin's, I suppose, where it is in its journey is the great way and the way for those who want an in-depth discussion around it is it sits at the base of a multi-tiered financial system. And just like FedWire sits at the base of pretty much the US and the global economy, where the major transactions occur at the base layer, right? Then above that, so what do we talk about major transactions? It's probably in the FedWire, it's the Reserve Bank of Australia and the Fed Reserve and how they transact and allow liquidity for banking system. And then they transact with the likes of MasterCard and Visa. But these are all transactions on the ledger, right? It's a ledger-based system. Bitcoin sits at the base layer, allowing Lightning Network to function above it and allowing other things to be built above that. Yeah. And so you don't need to buy a coffee and transact on the Bitcoin base layer. You transact on the second layer or third layer.
And that's a lot of these are being built. And that's because it has less fees and it can be instantaneous. Correct. Because the Bitcoin network is the sound money underlying these other systems built on top of it. Just like the internet is the fundamental bottom layer of then building your website on and payments on and YouTube on and all different apps atop it. Bitcoin is the underlying money, like the internet is the underlying system of connectivity. Yeah.
And you've got to remember that people, if we go back 25, 30 years, so the 1990s, there were people questioning, no one will be buying goods on the internet. Who's going to give their credit card details to someone online? It was a serious concern, right, around security.
Now you don't even think about it.
And we find ways to, like, the good thing around human, evolution, and you look at, electricity and the evolution of the wheel, and you look at, different forms of money. We evolve and we adapt. And when that becomes the norm, we see the adoption just absolutely escalate quickly. So, for a lot of us, that's not a world we live in. I think we spoke offline earlier, we need to recognize that, a significant portion of the population are just going to work, completing their tasks, adding value to the economy in their own way, and then coming home and having all these different elements that they've got to deal with at home, and thinking about what money is and the savings and investment strategies. Okay, they might have a thought about it, but never being able to sit down to really.
Where do you start?
Correct. Where do you start? So, I think just going back to the original question is we are very early, and Bitcoin's life is from 2009, so it's 16 years. And it has never been corrupted. And if there's something if you can show me something that has not been corrupted, that is a monetary system that's going around today in the existing world, it would be hard to find. Yeah. It would be hard to find. And it is stronger than ever. And we'll get to a lot of the real attributes Bitcoin has. And it's functioning as strong as ever.
Let's do that now.
The last 2 years, 5 years, whatever it is, for us, it's been prosperous, but it's not like the journey's end. It's actually so early in its piece that I see the next, for the rest of my life, this journey being, a real enjoyable experience. And that's what life is, man.
Yeah.
Life is that.
It's the purpose and meaning that now you can potentially find in guiding others to find something useful in their
Yeah.
life.
And contributing in that way, like if it does become something that can compete with gold or greater, then my contribution will be able to be greater.
Yeah,
Like,
yeah,
'cause
exactly.
like there's only so much, you know, you got to be content, right?
What are you going to do with your
Yeah.
time
So
and
like
your
that's
life?
what Bitcoin's enabled me to do is like, and I say this to my wife, like, why are we working? Why are we? What the fuck? When will you stop?
Yeah, you
Like
won't.
because the government have mandated that you can retire here, that's when you're going to retire.
Yeah,
So like, so what happens if I can't retire there because I haven't been able to put my money to, you know what I mean? Like, so then I've got to work when I'm in my, so like it plays with your mind, right?
yeah, for
Because at
sure.
some point, can they fund everybody? The Americans can't. So like, something's going to give.
Yeah, yeah. I mean, look, let's touch on the technology
Okay.
behind Bitcoin, clarity behind it, and we'll dispel some myths. We've talked about investing. We've talked about keeping your savings and over time, keeping them growing over time rather than devaluing over time.
Yeah.
So, but why Bitcoin? Like, why does that matter? We don't understand the technology behind it.
Yeah.
We kind of understand maybe why it matters, and these two pieces are going to be important in formulating a conviction behind giving you tangible evidence and concrete mindset to wanting to buy it and
Confidence.
putting and confidence to your purchasing power behind it.
Yeah.
So the first aspect of Bitcoin that we've talked a lot about already, decentralization.
Yeah.
Not having, so I guess there's a myth that we've all heard, and I'd like your response as to whether or not this is true. What happens when governments ban Bitcoin?
Yeah. It was something probably last 3 or 4 5 years was a possibility. And when it was small, I think you allude to when something isn't quite large enough and they see it as a threat. And when I say they, it's the central authorities globally. So I think you've got to go back to understanding why Bitcoin was created and how it was created and what drives it working. And once you do that,
Well, let's do it.
government's ability to ban it. Yeah, what we're going to what we'll unpack is government's ability to ban it requires a whole lot of energy. And to invest in that amount of energy, I don't know the exact dollar figure today, they simply don't have that power or that ability to collude with one another. Because I mean, they can't even agree on simple things, you know, humanitarian things, let alone, you know, an issue like this. So, and we always got to keep perspective that although Bitcoin has grown in what we see in Australian dollars and US dollars to be, you know, sizable in its per coin, it's a small fraction, like you mentioned. It's 0.2 of the global assets. So yes, it has grown, you know, at a great compounding annual growth
From
rate.
zero,
From zero,
a million bajillion
but
percent.
it is not a real threat. Like it is a bit laughable. So it's not where the central figures are spending much time. And if you look at the response from Michelle Bullock from the Reserve Bank of Australia when she was questioned, I think earlier this year,
Yeah, I've seen
she
that.
laughed it off. It
Yeah.
was didn't even entertain the discussion or the. So you know, it says more about that institution than it does about
Yeah.
you know the asset class. So let's.
When I guess we've dispelled a lot of the problems with government,
Yeah.
with central banks. So therefore, we disagree with their premise. I disagree with their premise and their need.
Their existence is really put into question because
End the
unlike
Fed
any-
by Ron Paul.
well, I mean, just look at it. Why do we need a central authority to control the cost of money when everything else is a free market? You know,
Supposed to be.
Yeah, that's right. So in other words, when I want to go buy a punnet of blueberries, there's a good supply. Price then drops to $3 a punnet. When there's not a supply and I still want them, am I prepared to pay $6 for them? So I might not because that's my price point. So that can be related to so many things and how that markets can be distorted, like we've spoken about in housing or in currency basis. But you know, yeah. So yeah,
Yeah. So in terms of the government, the myths behind whether they can ban it. So
yeah. So
China, for example, did try to ban it.
They did.
And they said that
They banned mining.
They banned mining. However, mining still exists around the world.
Well, mining then thrived in other jurisdictions.
And they banned the transaction of it at one point as well. But Chinese people still own Bitcoin.
Correct.
It still happens because, as we said before, the black market is the free market. It is the true market. Where there is a will, there is a way.
Yeah.
And you cannot control the machetes. You cannot say we're banning machetes. The machetes are still there. People might decide to not use them. People might decide to use the bins, but how will you ever know?
Yeah,
it's the same premise behind the banning of it. One country simply cannot.
Yeah.
They cannot ban it to the extent that you think.
Well, the assumption there is that it is being used for evil, right? And like, I mean, you could take that, run that line with pretty much every currency that exists today, because the Australian dollar is being used and funneled through either cash means or inappropriately through institutions right now. So it exists today. So, do the governments ban that? Of course they don't, because it's essential in how they function. So at some point there'll be a conversion that Bitcoin, in America leading the way like this, that Bitcoin becomes fundamental to how society functions. And whether you incorporate the broader crypto, time will tell whether, because the attributes that Bitcoin have, many of the non-Bitcoin or crypto broader, they just don't have. So, the skepticism that Bitcoiners have with all these others is that the centralization. So you don't have a network that controls the system, that ensures that its true formation, why it was built to not allow centralization, to not allow central authority to print more and to change the rules as it sees fit. Can occur easily. It can occur, but it takes a lot of work. And right now there are tens of thousands of nodes that operate. And as new software gets added, nodes have the choice to adopt that software, whether it be through Bitcoin Core or Bitcoin Knots, which is a current issue underway. But those nodes determine what software and what filters they put in.
So they are the entities that verify the network, and they hold the ledger, and they determine what is the Bitcoin network and what is the Bitcoin transactions. They record the history of the transactions.
They verify that the transactions are authentic.
Are true.
That's right.
And so the majority of nodes verifying that network means that network is the network in which we all operate, holding Bitcoin.
Yeah. It's the gatekeeper of the rules, ensures that things are functioning in line with what the protocol was built on.
So when we say decentralized, we mean every single person, individual node runner, person running nodes, which is what? A computer.
It's a computer, yeah. Right.
They are deciding individually or as a group that we believe in this thing, we believe in this thing, as opposed to a centralized person like Vitalik Buterin who can say, no, that shouldn't have happened. We are now rolling back the code because there was a door left open here and some Ethereum got took, but we'll just delete all those transactions back to this point and we'll run it forward again. That cannot happen on the Bitcoin network unless the majority of the nodes agree to do so.
Correct. They're switching, and that takes time. So even when new software is produced and the upgrade occurs, and there'd be some minor changes that might enhance certain layers of the network, because that's happened over the past 15 years, the adoption and the process of adoption happens in a progressive manner. It doesn't happen overnight. You don't wake up in the morning and you've gone on new software. You assess, you look at that to then adopt the upgrade. So, but there could be a divide. In 2016 and 17, there was the block size wars. I wasn't intimately in amongst it, but it sounded like it was quite nasty in reading upon it. But there was a belief that Bitcoin needed to be larger in their blocks because there's a cap on the size of the blocks on the time chain or blockchain, which then limits the amount of transactions. And there was a view on some people who were Bitcoiners that they wanted to be larger because there were some benefits. Unfortunately, when you change something like that, the negatives on the security and the ability to verify every transaction to be true gets put to the background. And so the nodes basically said, no, we want to maintain the security element, which is then means we hold the size of each block to, I think it's is it 1 megabyte? I think it is, or to the current size.
Wasn't it 2? Is it
yeah.
2 megabytes?
Yeah.
But they wanted 8. I think
it was much larger.
There was a compromise there that they did.
It has been a compromise, but again, it's within check, so to speak. And what does that mean? It means that those blocks can be verified in that 10-minute that a block gets.
Every interval, the 10-minute verification, the mining and solving of that Bitcoin algorithm, the puzzle, to then proceed with those transactions. This sounds convoluted. It sounds confusing. It kind of matters. It kind of doesn't. But it's giving you a frame of why centralization matters. Yeah, that's important.
Think about it. If I'm sending Ryan $1,000 or the equivalent in Bitcoin, could be
sign me up.
Right, I'm sending you that, and I'm putting it through the blockchain, and we're on the next block. The miner is putting it into their block. So when they solve the mathematical problem, they might have 3,000 transactions. One of them is ours, mine to yours. Then the node is verifying that the process we used, I had the Bitcoin, and they're verifying that it's gone to you. So all the rules that we need to adhere to make that transaction true have been adhered to.
Right.
It's a proof of work system, and there's a big difference. Proof of work is that we've adhered to the rules of the network to actually transact. And there's no double spending that occurs. In other words, I can't then go and send it to my wife or my kids or another friend.
And the proof of work, is that the solving of the algorithm, solving of the puzzle that the miner solves, as opposed to proof of stake?
Well, the proof of stake is I have a higher number of coins than you, and so then I have
a larger greater voting power.
That's right.
Yeah.
So in other words,
is that a system that we want?
Yeah.
Because isn't that Ethereum?
That's Ethereum.
Right.
Most other coins operate as a proof of stake.
Right. Yeah.
And what the rationale and what the benefits for them are is transactions can occur quickly. Things can be done quickly. But the security of the network and the centralization of the network is a byproduct. It's not a key feature.
One or two voting parties can say, we want to do this, we want to change this.
That's right.
We currently operate in that system. The government are the entities. The government and the Reserve Bank or the Fed or whatever it is, whatever jurisdiction you're in, they are individuals that centralize decision-making.
Correct. As
opposed to tens of thousands of nodes.
Absolutely.
That decentralize decision making.
Yeah, so you're spot on. Whether it's governments or even corporations, you look at the major corporations that influence government policy, it's centralized. They have a big influence. They're lobbyists.
Or if you hold stake in a company and they decide to do a capital raise, and you just get your holdings diluted. in a quarter, in a half, whatever it is.
Yeah.
Centralized decision made means I get diluted. I lose value.
Absolutely. So in the Bitcoin network, it doesn't matter whether you have a 0.1 of a Bitcoin or 1,000 or 100,000 Bitcoin. You don't have a greater influence.
You don't get a bigger say.
And you cannot change the rules of the network to suit yourself. So, to me, that's a very important feature, because with any other coin, or pretty much 99% of the other coins or more, they're a proof of stake concept, and therefore that manipulation, and we see it repeatedly where there is no value in the underlying asset or that coin being represented, and owners in turn rug pull, so to speak, and that is they will release coins to the market, sell them at their highest price, leaving those who invested when they're sold, which is really put the price of the coin down, holding a significant loss, not realizing that is there value there or not, because you've lost trust in this whole coin that you invested in for whatever purpose originally. So, these variables exist with companies. So going back to my example around when you're researching a company, these risks exist at that level, because like you said, they could dilute just to run the company. They could issue more shares from that perspective, or issue more shares to purchase another company, or buy more debt accordingly. So in Bitcoin, this decentralization isn't a factor. In fact, it's a feature. And so it's a very key feature from an investment, because whether it's Larry Fink at BlackRock, who's accumulating, significant over 700,000 Bitcoin on behalf through his ETF strategy, or whether it's Michael Saylor, whose strategy has 630,000, or whether it's Bill, who has, whatever
Undisclosed.
number. Yeah, that's right. Whatever portion of a Bitcoin or multiples of a Bitcoin. We are equals in that our interests
our
are
rights are equal. That's democracy.
That's the free market.
That's the idea of democracy. Now, I don't believe that true democracy exists. Decentralization is the critical feature, as well as scarcity.
Yes.
Speak to us about scarcity.
So scarcity, I think when we look at an investment, scarcity becomes real relevant. And again, going back to the analogy of property, if you go and buy a seafront property, then generally you've outperformed probably general property performance. So because why? It's beachfront or it's rare. It's hard to get. Now, we have massive coastlines in Australia, but we all know that those coastlines are expensive. And so you're paying a premium because they're desirable. When something's desirable, whether it's a piece of art or a jewelry or a collectible, they're desirable. So why? Because there's less of them, or less of that positioning of them. So we know that from history, and that will continue to reign true. That's a fundamental to a business or investment strategy. So when we're looking for future investment strategy, or creating one, or looking to invest into, scarcity's got to be a factor, got to be something you consider. And unlike most other coins, Bitcoin has a limit. The protocol is set that every coin that exists in circulation today, which is just under 97% of the coins have been mined, has all come through a proof of work. In other words, it's been mined. A mathematical problem has been solved by a miner, who's then solved that puzzle to receive the subsidy, the reward for that solving. Now, going back, 10 years, 12 years, that reward was greater than it is today, but the value of Bitcoin was a lot less. So it was built that way. So in other words, the coin on the first cycle of Bitcoin in 2009, the reward was 50 Bitcoin per block being solved.
Every 10 minutes, 50 Bitcoin would go to that miner, the mining machine that just guesses number. Is it this one? Is it this one? Is it this one? That was the reward.
That was a reward. And so, that's 50% of the supply of the network in that 4-year period was released. And then the next 4-year cycle, so every 4 years, that subsidy that is called is halved. So the next 4-year cycle was 25 Bitcoin. Now, where we sit today, we had a halving last year in April, which I heard you mention in a previous podcast. We're at 3.125 Bitcoin.
Yep.
And that, when's the best time to mine Bitcoin? Well, it was in 2009. When's the next best time? Similar to planting an oak tree, is today, because it's only getting less. So that cycle is every, I think it's 210,000 blocks. So that block on average at 10 minutes is a 4-year cycle. That's where it comes from. So it's 210,000 blocks that are being mined. So, in other words, it'll be in the year approximately 2035 to 2135 to 2140, where the last portion of a block will be mined. And we know that because it's on a protocol, it's on a schedule to do that, which it cannot be interrupted.
It can be, I guess it can be changed if the majority of the nodes decide to change it, but that's future problem. It's a future issue that potentially needs to get worked out.
Well, the incentive isn't there.
Yeah.
So you're talking about a dilution or a change in the network. The question is, will there be enough nodes? So you've got to remember, the nodes are generally owners of Bitcoin. And so they're looking to protect what's been created. And definitely in my case, because it's a significant portion of where I see humanity going, let alone my economic position. So, you're going to protect that, right? So
you're incentivized to protect it and not dilute yourself. Correct. But there might be subtle changes, I guess I'm indicating, like
for sure,
quantum resistance and whatever else.
Yeah. So changes in how it functions and how it evolves Yeah, absolutely. I see that being relevant. There'll be some discussion about it, robust discussion and debate, and that should happen because we all see things from different angles, and we all see it being something that can be something special, and that's the most exciting part of it. That it's going to produce, as time goes on, produce options for us all that we didn't fathom. We're not fathoming today. We're not even considering today. So. That scarcity aspect means that that at a rate of that the government are producing the currency of the Australian dollar at 7 or 10% on average.
That's not scarce.
That's not scarce, and therefore that's why your purchasing power is reduced every year because there's more of it. So therefore, the only way you keep up is by either earning more than 7% a year, so it maintains, or you're able to earn more than that.
Or you put your money into a thing that's going up greater than
that's right.
the dilution factor.
Correct.
So the scarcity in Bitcoin has gone from a block reward of 50, 25, halving, 12, 6.25, 3.125.
Yes.
It is becoming more and more scarce.
Okay. Now, we all know that when something is scarce, it's desirable. It's just human nature, right? So go to the most fashionable shops or the most, the car brands that you desire the most.
The banana
McLaren.
stuck to a wall.
Yeah, that's right. McLaren, as an example. To buy a unique McLaren, you are going to pay, right? Because that is the only McLaren that might be produced of that type because it's very hard to produce. Or
I mean, they're kind of status symbols as well. But do you? I don't want to detour it.
Yeah.
But Bitcoin as a status symbol, is it worth venturing into that? Probably
it's
not.
It's not the status symbol of it, but it's probably just the notion that as something becomes more scarce, it becomes more desirable. Now let's be frank, so to speak, that the adoption rate of Bitcoin has really been it's a grass led movement. So 57% or thereabouts of the Bitcoin is still owned by individuals. Individuals. So this isn't a corporate treasury. This isn't a Facebook where institutions are being, a first run at it and have the majority stake. And as it pops to whatever price after its listing on the share market,
they sell something.
We get the dregs of it and the upside is minimal. That it's actually in reverse. So, I'm not sure. I remember there's a significant number of millionaires or billionaires. Even if every one of those wanted one Bitcoin, there's not enough.
Yeah, they couldn't do it.
So I think what the scarcity element means that it won't be necessarily a fashionable thing. It's more that the people who have wealth are always looking to be performing at a high rate of return because they do have an ego. They do want to match the best performances that are out there. And they
want to store their value over time because those people understand inflation more than most.
Now, if over time that asset class is Bitcoin, they will get exposure to it, and they are currently doing
1%, 2%, 5%, whatever it is.
Correct. Now, they might not go to a weighting that is extraordinary, but
like you or I.
That's right. That's fine. That's and for anyone else who is been in the understands it well and is comfortable with it, but they will as they increase that. And adoption occurs on an individual, multiply that by private companies, public companies, government, states, and then nation states. Where else is it? You can see that adoption and demand will exceed what supply will be because as the price rises, unlike something like gold, investment into Bitcoin doesn't change the number of coins that can be mined. So this is an important point. If let's say the Bitcoin Australian dollar price, which is 170 today, was to jump to 500,000 tomorrow, you are not able to produce more Bitcoin. The only thing that is showing is that if you want to buy a Bitcoin, it will cost you that much because the sellers that are on the market, that's what they're offering. Because what that will do is that will drive more investment into mining to get the reward of 3.125, which will have to be at a higher, power So the computing power of the miner needs to be greater to get it, because the demand is higher to get the 3.125, because the value of the 3.125 has gone up 4x.
The flywheel of that demand factor. Now, if I can just detour us to, let's talk about commodities, average commodities. When gold price goes up, the commodity cycle is that, or copper price or silver price or whatever it is, components that are used as a utility, or in gold's instance, as a store of value, when these things go up in price, it encourages investment. That's the free market operating and saying, we are going to now put more money into investing in this copper mine, this rare earths mine, whatever's the flavor of the month, whatever's going up in price. As time goes on, 2 years then pass, those mining operations are online. What happens? They mine that commodity. The price of that commodity starts coming down because there's more, it's become less scarce. We've just mined a whole bunch of it.
Yeah, assuming demand doesn't continue to rise accordingly.
Right. So demand and supply. So we're just talking about a supply factor there.
Yeah.
And then the demand thing, well, if they find an alternative to copper or an alternative to gold in an iPhone or in a device, then the demand completely goes away because they're going to use something else.
There's always a supply side response. The ability to have a supply side response is always there. And even with gold. So even with gold, there are mines today that are being specced out or out of space being considered. And at a certain price, it will be worthwhile to go and get it.
Investing in.
100%.
Whereas Bitcoin, yes, the miners are affected in terms of their block reward. With that halving, if you're not affordable, if it doesn't work economically for you as a miner, you sell your miners to someone else, another operation. The mining isn't going anywhere because always someone will do it.
Well, the reward or the subsidy, when we've only talked about the subsidy, the reward from the block being mined, the successful block mathematical problem, they do get some transaction fees, which are small. But what happens is, because that 3.125 today per block, and if the value of Bitcoin's gone up, it means that they want to invest more into computing power. And we've seen that. We've seen the computing power required to mine the block. You could have a standard laptop 12 years ago. Today, you're now buying an A6,
your technology's outdated.
And some of these computers powering has gone up when Bitcoin's ripped up to 15,000, 20,000. So, and then you've got the energy factor to mine as well. You know, how you source your energy to mine.
That's been a reason for the cycles as well, the halving reward and the mining that's behind it. Because when that changes, that cycle, the cycle is a reverse exponential growth, right? Like it's going 50 Bitcoin per block, and then it's coming down and down and down. It's going to zero. It's going to zero. That's so this is testament to the volatility. The volatility of the price of Bitcoin will follow that, which is why we're getting less volatility and we'll continue to do so.
I think your point is also that the halving cycle now is less relevant.
Yes.
We saw that last year. You know, we've in previous cycles, we've seen as halving happens, we see the volatility increase. We're seeing Bitcoin have a lot less volatility at the halving or vice, because people think it's going to, go up significantly because
they're timing it. They're speculating. But what it speaks to is that when you look at the Bitcoin price, you see these peaks and troughs like that, and you're like, what the hell is that? That's volatile. This is the explanation as to why the volatility is decreasing and why it's finding itself as an asset, as well as other developments.
It's becoming, a toddler to a young boy to an adolescent. We're moving into these kind of phases where I don't even think we're a teenager yet. So, and your analogy around, a boy or girl growing up is very true.
It's apt.
Yeah, that it is. I think it's very, and we've got a long way to go because we're nowhere near an adult. So, if we keep that in mind, that we are still very early and just understand why you bought it, that the decentralization and the scarcity are key components that cannot be altered without significant consensus and effort, and the ability for someone to shut it down either individually or as a government or governments certainly is nearly impossible. So the risk factor was higher 5 years ago, was 10 years ago. the risk now of that is virtually minimal or nil or close to it. So therefore, the reward still consists very high, and we'll get into why that is, even at the prices that we're seeing, because as we talked about previously, we've got so much pools of capital that we're going to draw on. So when someone considers an investment of buying a negative yielding real estate in Australia, why wouldn't you consider buying portions over periods of time with your money into Bitcoin that is growing at 30, 40, 50% plus per year, and is likely to continue that for a decade or more to come, or greater than that?
It's only going to continue to become more scarce.
That's right.
As opposed to housing. Yes, there's a land component. The land in housing is the scarce bit. My place here, if all the block sizes, when it becomes the house prices get to a point, just like a commodity, okay, I'm going to now sell my block, subdivide, either make houses or sell them to someone else, and they can do the work. They will do that. The scarcity, where I am, I get no say in it. Like, if a neighborhood or an empty plot of land behind me decides to open up and then they put 1,000 houses in there, I am no longer as scarce as what I once was. What does that happen to the value of my house?
That's right. That's right.
The decentralized scarcity of Bitcoin is they're the most fundamental aspects to it.
Very important.
Digital scarcity backed by energy.
That's right.
So durability over time.
Yeah.
It's not decaying. A house, when you invest in a house,
that's right,
it's costing you money. Land tax, plumbing, rates. You've got to fix bits and pieces as an investment property. Even if you live in it, it still has decaying costs.
I think maybe that digital element, that it's not tangible, is hard for a lot of us to sort of really, I suppose, bring it, because we like tangible. We like the cup of coffee. We like the house because we see it. We feel like
a common comment that someone will say, why do you invest in Bitcoin? Why do you invest in houses? I invest in houses because it's tangible. I can see it. I can feel it. I get it.
Yeah. So I think that digital in combination with the durability is really good to flip it into a positive. Like, don't see it as a negative, because the world we live in, especially in Australia, I mean, most of us transact, I'd say 95%, or I know my kids, 100% is all digital. It's all money moving from one account to another, expenditure or money coming in or movement. So, think of the next generation on what they're doing. Think of, and then their generation, what I'm sure my kids are doing now. The generation after them are going to be laughing at them on what the digital age is for them.
Yeah.
So, it takes us to really have an open mind to that, but it's happening in front of us anyway. I mean, having come and operated 2 cafes over the last 10 years, the first cafe I had was a 50% cash, 50% digital. By the second cafe, it's 90-10, 90% digital transactions, 10% cash. Now, that's a signal in itself, right? So, and like I said, just look at your own life on how you transact. I mean, do you go to the post office with cash, or to a bank to, pay off a electricity bill? You probably don't. So, it's inefficient. It's much better, much easier to transact. And that's how the platforms are working as well. So I think if we look and say, well, it's only going to escalate and be more common. And if that's true, only because our parents or grandparents, as they sort of pass on and the new generation take helm, and policies are going to be built accordingly, then something like the durability of Bitcoin being digital, really comes to the fore, and transacting in Bitcoin and AI and the like becomes a solution and an outlet. So, but yeah, I agree with you that the durability, when you do a comparative around costs of something like an investment property, or to secure a piece of art or a special car, that comes with risk and costs and insurance and all these elements.
Yeah, every year,
it's quite a small amount with Bitcoin.
Every year, it's costing you $5,000 to $10,000 for the decay in your home minimum. You're having to replace things within it. So even as the scarcity, the durability, the fungibility. I can transfer 0.1 Bitcoin to you. You can transfer 0.1 Bitcoin to me.
Yep.
Come from different places. It equals the same thing.
That's right.
It's not.
It's not going to be, that's right. It's not going to be, it won't take a different form. Yeah, that's right. One Bitcoin is one Bitcoin.
Divisibility. So the reason gold became moot as a money was because it was too hard to be divisible. They couldn't chip off a bit and then verify it and go, yes, this is definitely gold, and give a gold flake to the barista.
Yeah, that's right.
To bring two analogies together.
Authenticate that was gold.
Right. So that it doesn't make sense as a money. Technology surpassed it. It doesn't work. We've moved on.
Yeah. Yeah. But the divisibility, I think when
Bitcoin.
Bitcoin, like if you think of its ability to be 100 million sats, we will start talking in Satoshis at some point, because...
Which is so every Bitcoin is divisible by 100 million sats. Yep. They call them sats or Satoshis. One Bitcoin equals 100 million sats. You might be transacting in 10,000 sats
to buy coffee.
Whatever. That's right.
So when we save and convert into Bitcoin, our dollar will buy, 170 sats per dollar or whatever it might be. So that sort of language will come through as time evolves, because as Bitcoin goes from 170, 100,000 today to 500,000 or beyond in time, it'll be more relevant to talk to the sats. So the ability for it to move like that and divisible is not something that's common knowledge and not something we do frequently. But when you buy $1,000 of Bitcoin today, you essentially are buying, 16 million sats, or there are 17 million sats, that kind of thing, because it's divisible. So you can buy fractions of it and accordingly move it to somebody else on the network.
Yeah.
So,
and that functionality of it is why it's a brilliant feature of it. And that's what makes
it cheap, so cheap.
Digital gold.
Oh.
It's the same thing as gold in that it's scarce. The reason why gold was desirable and shiny and culturally useful to some. Yes, it's a utility, and Peter Schiff can have his opinions on it, but even as a utility, it was a store of value.
Yeah. But the visibility also means that, and go back to that centralization, I could send you my Bitcoin or a portion of it, whatever it is, and it could be whatever the amount, without a intermediate party, right, who needs to verify it. It's verified by the network. So it's that peer-to-peer. Remember, that's its core by design, that it enables us to transact anywhere in the world at any time of the day, 24/7, because that's how it functions.
Yeah.
So, when markets are only functioning 6.5 hours a day in the US, 5 days a week, Bitcoin functions 24/7 as a network and as an open market to purchase and to sell and transact. It never sleeps. So are you not telling me that our digital age will be 24/7, whether we tokenize everything but Bitcoin is leading the way in that sense. And if I want to purchase property in Italy, I could transact and send accordingly a Bitcoin or whatever cost of that is in Bitcoin within a short period of time, and let alone contracts and the like that come with it.
And it's verified, and you have it.
Correct.
And you're able to do that sovereignly by yourself with another individual who 100%. Believes in the same thing. Even your talking points on the 24/7 part of it, there is a financial use case to that aspect. And that's why Bitcoin does move around, particularly over the weekends. It's like, what's going to happen? What's happened over the weekend?
Yeah.
What's going to happen Monday morning in America?
Yeah.
And that's the volatility that you see in Bitcoin. It predicts the future because it's the most liquid.
It moves first.
Yeah,
it's the first mover.
First mover
100%.
liquidity.
Yeah, we saw with the humanitarian issues through Iran, or what Israel are doing, and the conflict that occurs globally, that if there's conflict, that markets will have jitters when it reopens on Monday night in America, particularly, or in Australia on Monday morning, and it's occurring on a Sunday, Bitcoin will move accordingly. That's what you get in a liquid market. And you got to remember, the liquidity with Bitcoin is it's as liquid as anything going around. So your ability to transact, whether it's one Satoshi or 100 Bitcoin, is there. And again, I'll go back to the cost of that. You try and move, $100 million out of the Australian banking system into a European bank.
Yeah.
I mean, you try and move $50,000 and see what resistance you get. So, and see the ability to do that within a window of an hour.
Yeah.
So, it's just so far different. It's so significantly better that I think it's a matter of time and when this all becomes just normal and business adopts this.
So if we can compare some of these aspects to some other, we've compared it a lot with housing. Let's compare it to some of these other coins, right? So Trump coin, for example, that has 1 trillion coins to be released. There's 200 billion coins that have been released already. Shot up, from $1, $70, and then it's just died. That's the rug pull you're talking about. As money goes in, the people who gave themselves the coins, they just sell, cost them nothing. They rug pull you, which means that your asset just died in value.
Yeah. So what they're doing is they're escrowing coins.
Yep.
They allocate themselves, but they can't sell them for a period of time.
Then next year, another 200 billion coins. For 5 years, 200 billion coins get released. That is inflation. That's not 10% of the money supply increasing. That's 100% of the money supply increasing in a year, and then 50% increasing the next year, and then 33% the next. Like, it's disgusting. And if you don't look into it and understand, and you think, oh, yeah, cool, Bitcoin's 170,000, I've missed it. I'll get the next one. I'll get the second best one. I'll get the third best one. I'll get the one that's 0.01 cents Shiba coin, but there's a couple of billion of those.
Yeah.
You're buying into something that has none of this scarcity, transparency, decentralization attached to it.
Yeah, and the other thing is, it's not. So we've got to understand there are now there's capital that's flowing into Bitcoin that's investing in business development and business purposes. Like I mentioned before around Jack Dorsey, I mean, Square is, a leading digital transactor globally, right? So when he provides the option for Bitcoin transactions, that's further securing and adding value to the network and development on the network. And this is happening, whether it's in lending, whether it's in, different elements on being a medium of exchange, it's occurring. But many of us don't see that occurring, particularly in the Western world, because the need isn't as high.
Particularly in Australia.
Yeah, that's right. So, but it is where there are capital funds that are specifically orientated to Bitcoin business development, and that will become more so as capital sees the value of the asset of Bitcoin and the development of it. So we've talked about its attributes, but what we're not talking about is how second and third layers that sit above the base layer of Bitcoin will transact and develop, which will further secure Bitcoin. Because what we have seen is as Bitcoin grows in value at the base layer, not necessarily more transactions happen, but it's actually more value of transactions because they get consolidated at the higher layer and ultimately get transacted on the base layer.
Yeah.
And so when we look at, what do they say? Bitcoin is as much for enemies as it is for.
You can't tell someone else you can't use it.
No.
You can't say
Russia can't buy.
Putin and Trump can't go, you're not using it, or you're not having our oil, or you're not doing this, or we're not using your monetary rails.
Yeah. So if Russia can't use the US dollar because in the Ukraine with the Ukraine war and that's the monetary penalty that they've paid, well, they're going to find other ways to transact their commodities or whatever it is they want to transact with China or anyone else. So that could be Bitcoin, but it is synonymous. So I'm not clear on that, but I suspect Putin's made many comments in regards to the the decentralized nature and the sovereignty that you have that it's not easy to identify.
Yeah, he said you can't stop it.
Yeah, you can't stop it.
And if they create their own BRICS coin, because there's commentary around that, so what? It's going to be centralized. It's not going to have these aspects. So eventually it will go to shit.
Yeah.
That's just what will happen. I mean, it doesn't matter.
That's right. So when we look at these other coins, I have not done, and I'll disclose that once I can't get past the centralized nature of a coin, there's no point proceeding to investigate the investment class. Because if I wanted to look at an investment that is centralized, I will do an equity. I'll buy a company that has clear rules and regulations on how it needs to function that I can assess on merit, not a coin that is unregulated, that doesn't have rules pertaining to it, that can do what it wants when it wants, and it's whether it's 1 or 5 people control it. So I think it's important for people to quickly. That's my first question when someone asks me about, a coin.
Solana or XRP.
I'll ask, is it a centralized network? Do those at the helm control its ability to distribute more coins or allocate more or direct the way it functions?
And I will suggest that when you ask people that question, majority of people would say, I don't know.
Yeah. And therefore, that would be.
So when you're talking about being an investor, first and foremost on your history of markets, you have a spreadsheet or you've got a checklist of different things you're looking for, and you're ticking them off as you go. Is it cash flow positive? Does it have a lot of free cash flow that you can invest in? Does it have assets? What is its cost? Does it have annual recurring revenue? Is it a SaaS business? Does it have, what are the margins? You're looking at these things. Now you're suggesting, I'm putting it into your words, scarcity, decentralized, tick, tick.
Yes.
If it doesn't have those two things, you're not interested in it.
Well, it doesn't compete with Bitcoin.
Right.
And if I value those things very highly, which can't be corrupted, then why am I going to put my hard-earned money into anything other than Bitcoin?
Because you have to trust it. You're trusting the Bitcoin network based on what you know about it, or you're trusting another network or another CEO or another equity, or you're trusting the government that they'll keep propping up the housing market when you go and buy a house.
That's right. So it's not that I need to trust the network. It's verifiable. Everything what Bitcoin stands for is verifiable. You can verify the transaction, the blockchain, the existence of scarcity. It's all verifiable. I don't need someone to tell me it. I can do it myself. So the self-sovereignty kicks in as well. So someone can tell me a story about whatever it is, but if they don't have those attributes, then I'm not going to waste my time and energy. I'm going to put myself into where I can contribute positively to society in another way. Because it will not perform over time. My belief is Bitcoin will give me the returns that I'm looking for generational prosperity, both personally, for my family, and for my community. Because it starts to take place. El Salvador's an example of it. I mean, I look forward to getting there over the next couple of years, and I'll see it for myself. But the indicators are all there. The crime rates, what they've done with crime and taking a firm approach, but then the money and the way they've handled their fiscal position is, to me, a lot more responsible. And also the flow-on effects that come for the people and citizens. The community is a lot more, they're comfortable, they're safer, they've got viable, and the education that's happening at 7-year-olds being educated on what sound money is and what Bitcoin is, it's unprecedented. It's not happening anywhere else globally. And that's exciting. And I think they're going to build a legacy for generations that it'll be hard to catch, right? Because who teaches sound money?
I was a teacher for 12 years, right? They don't teach critical thinking. They say they do, they don't. The system's not designed that way. No. We're set up to teach hierarchy. You listen to the person above you, listen to the teacher, who listens to the coordinator, who listens to the principal, the vice principal, and the principal. And you're a cog in the machine because we need you to go out and be productive in society and work and not ask questions and disrupt the system.
Yeah, because that's what's at play and everyone benefits along the way, right?
And it does that. There's not necessarily, I don't agree with that in a lot of ways. However, I understand that as a big cohort of people, to coagulate and to move them all in the same direction, you do need to have values and principles and systems that align people to function as a society in a way that moves it. But what I'm bringing us full circle back to the start of the conversation, it's scary at the moment that we are being moved in different directions, and I don't know where we're being moved, and I don't know why. But I sense it's more towards socialism, potentially communism, but Marxism. Not all the way there, not to the polar end of it, but we're being moved in ways that I don't know that I agree with them.
Yeah, I think what we're seeing is that we all feel as though, and the government feels as though they've got a responsibility to have the answers for everything.
Yeah.
And that intervention, whether it goes down the path, I mean, communism, if it worked, then we all would be living in, that equality and that fair distribution. But we know that doesn't work like that. So whereas
capitalism's the least worst economic system we have.
Well, again, capitalism is about the best use of capital, the money itself. So if people are not going to waste their hard-earned money on something in a poor allocation if the return doesn't come through, and that could be social in combination with economics. So, but if the value of that or the reward doesn't align, then you get a misallocation, and if we're seeing constant misallocation, then there's no incentive to be efficient because you know what I mean. Like it's all breaking down. Like that's a signal, and when the government is, I suppose, I know we're getting a little bit off track, but when a lot of the employment is being created through government, it's like if that didn't happen, what would happen to our unemployment levels? What would happen to society?
What's really happening?
So like that to me worries me because that is not a sustainable model. And like you said, it's moving to left on the spectrum, if you want to call it. But going back to what we're also seeing is that we've got, quite, I wouldn't say radical, but it's like these coins that are evolving and emerging is, that they're the next Bitcoin because Bitcoin's had its run.
Yeah.
But the explanation, what is the business case here? And that's key and critical. I respect the fact that my knowledge on many coins doesn't exist. It's
rightly so.
It's deliberate, right? Because if they don't meet those core principles, then I'm not going to waste my time.
Yeah.
If other people don't value those principles, that's okay. That's for them. But what will in the good sense of time, it'll prove its worth. Time will show what is valued. And historically, what has happened is something that is scarce, decentralized, operates honestly with a long-term horizon that's not corruptible. It's valuable, and that is a monetary. One of the things that haven't been challenged is the financial system. How we've always worked for the last 50, 70, 80, 100 years has not been challenged in the digital age. And I think we're seeing that. And that's exciting. I think I count myself very lucky to be living through this and to have access to capital to be able to buy a, Bitcoin in some way, because I know my generations will thank me, and I'm sure those who have it, I encourage you to take that approach and value it accordingly. So, and do as much as you can.
Let's dispel a couple of myths and then we'll wrap it.
Yeah.
So government's being able to ban it. I've touched on that.
Yep.
What's another myth around Bitcoin that you think that's out there that's not true?
I think we touched on the tangible one.
Yeah. We could go more into that.
Yeah,
I think.
Do you want to talk about that?
The IP of a company, that's intangible too. You
Correct.
can't touch the Coca-Cola brand and see what it actually is.
Microsoft's a great example. Like Microsoft software, right? They used to be hardware sort of based with, you have to install Microsoft itself. But now
moved to the cloud.
Yeah, it's moved to the cloud, and the way it functions is all software based. So, that's not tangible.
Yeah.
The Australian dollar's not tangible. I mean, it is when you have it as cash.
Sometimes it is. I mean, I think it's like 5% of the money's actually money, but the rest is digital. It's just numbers on an account.
Correct.
Another intangible thing.
Yeah. So like, I think we just got to broaden our spectrum around, it's not an asset that has cash flow. I agree with that, but neither does the currency, and neither does gold. This is an asset class. It's a digital asset, and it's capital. And if you really listen to some of the work that Michael Saylor says, and it's Manhattan real estate. This is
it's digital real estate.
Yeah, 100%. Yeah. Like
back 100 years ago, if you could buy Manhattan, would you do it?
That's what's going on here, and that's what really excites me on where we're heading. In that, firstly, financially, the traditional finance has lived in the current world, which is all about fractional reserve banking and high debt levels, and that's how that works. Whereas, really Bitcoin challenges that scenario. And I think we're seeing that adoption occur. And then what's ahead is, so many exciting platforms that enable us to continue to pivot. And, some of the things that are happening in I suppose, alternative coins, if you want to call it, a lot of that will be done on Bitcoin's second and third layers, transacting on a small scale. Yeah.
Because the fundamental layer of the store of value is the most important thing.
Correct.
Having that decentralized, having that scarce,
Yes.
then build your NFTs on that if that's what you want. But
Well, right.
if you're talking about intangibles, NFTs, it's cool. It might be scarce because that's the only one. But if I can print 100 of them tomorrow, how scarce is it?
Yeah, that's right.
And that's what a lot of famous Logan Paul and all these guys who bought these NFTs, hundreds of thousands of dollars, they're worth nothing.
They're worth nothing now. Yeah. So what other myths have we got?
A common myth is that Bitcoin is a Ponzi scheme.
Yeah.
So why isn't it?
Well, again, go back to I think know why you would own it and what is your. I think it's a form of money for me and a store of value, and it will be a medium of exchange and a unit of accounting time, right? So if that's where I think the trajectory is, I see it as something I can use for value. So I can buy a plant or a house or whatever it might be, and I see its value continue to be there over time. It's historically done that. So a Ponzi scheme has I suppose, unlimited, supply. I assume it has the ability for a centralization. In other words, someone can come in and be the biggest beneficiary of it, and then the value just deteriorates. But what we're talking about here is, if we're talking about it being money, or money in a digital form, well, we just spoke about how we're all moving to a digital form of money. And so I only see that being more and more relevant. How can Bitcoin continue to be more adopted? Well, it's by more understanding and understanding of its key characteristics as to why it presents such value. And that is, it is scarce, it is decentralized, it is sovereign, it is portable and divisible. So all these elements go to it being something that you want to be holding and saving your hard-earned, if you're getting paid in Australia. Now, many people get paid in Bitcoin, believe it or not. A Ponzi is something that it just runs up really hard and then fails to provide the value, or the demand for it just isn't there. So more people don't want to pay the higher price to push it up higher. So it requires more people to come in.
Yeah.
Well, we know, I think it's something like 50% of the supply has come in at prices that are over $90,000.
Yep. That's US. The realized Bitcoin price. So people are deciding that I will buy this thing above 90,000 US, and I'm putting my money into it now. It's not like printed into existence and then rug pulled out.
That's right.
But a Ponzi requires more and more money coming in to bail out those and pay dividends to shareholders who are wanting to exit or to keep the returns going. Yeah. And it's dependent upon that system for it to continue to perpetuate. And they do call the Australian housing market at times, it's all satirical. Like, it's not really a Ponzi, but you can see how it has Ponzi-like aspects in the Australian housing market, where it's just prop after prop after prop, with the government bringing ideas and regulation and opportunity in for more people to get in so that others can get out without collapsing the whole thing.
Continuing to transact.
Yeah.
That's the key. And continuing to raise prices at a reasonable level, because I think there's recognition that when you're at 10 and 15 times your income to purchase a house, at some point
you can't do it.
How far are you going to stretch the
you can do it, but your lifestyle is completely captured, and you're working to the bone to pay for the thing.
I mean, if we look at when the tulip Ponzi scheme, I think that's the most famous of history. That again, the demand, I assume what happened was the demand for tulips just subsided. So all of a sudden you had excitement and euphoria, and all these things that happen, and that's happened in Bitcoin cycle, particularly in the first probably 3 cycles. What's that, through to 2020, 21, where we saw the sort of euphoric phases of it, and then the decline of 50, 60, 70%. That was common. That occurred. So, they were sort of, elements of Ponzi, but what we did see is the demand come back in, and whether it was the, foundational people who knew about it and understand how it works, that it's not going away, and it represents true money and value that can be used in future, delayed gratification. We see the value coming in. And like I said, if thereabouts of 50% of the current supply has been purchased at around 90,000 US and greater, that tells me people are, continuing to pile into something that is scarce and has those attributes which we spoke of, that they value and I value. So, I can't see that changing. That I'm not going to change on what I value, why my hard-earned money should be invested in something like that. Just like, I have a home and I invested in that, but I don't look at it as a financial means to get me up. But
you find value in it, in what you need as a utility in your life.
It's safe. It's a roof over my head. It gives me warmth. It gives me cooling.
Yeah.
And I have meals with my family, which is very important to me. And, that's what I get out of that. But, from an asset or keeping my purchasing power, it's Bitcoin that I think represents the value and the upside that, hard to see that being replicated in decades to come. And you've got to remember the life of a company. There's not many companies that survive. You look at
for decades.
Yeah, that's right. You look at the top, in the S&P 500, the biggest market in the world, the top 20 or 50 companies do evolve every 20 years.
They either evolve or they die.
That's right.
And they get innovated over.
They're
and
very
they become
different.
Obsolete.
Yeah, correct. So here we have an innovation. Here we have technology and digital capital that...
It can't be innovated upon. It can't... A new coin isn't going to come out and re-innovate all these aspects of Bitcoin and then go, this is a better Bitcoin. Yeah. That's not going to happen.
It can be copied, but the network's effects that it has generated... cannot be replicated.
The psychology behind it cannot be manipulated.
That's right.
and re-emphasized.
Yeah.
In terms of it being a Ponzi, Bernie Madoff documentary, there's a couple of them on Netflix. That is the true nature of a Ponzi. Reliable dividends, 10% every year, 10%, 10%, 10%. That can't be true. What's happening? Well, Ponzi is high returns with no risk. We've explained there is risk in Bitcoin. There's risk in your entry point.
Well, there's volatility.
And there's volatility. But there's risk in it too, because maybe it doesn't come off as an asset, but you and I believe it will, based on all our education.
So just on the risk. So I think we've spoken about that. Absolutely. You need to go on. There is risk. And that is that the network itself, what fundamentally underpins it, is corrupted. And whichever way, whether that's quantum computing and we don't adapt, or it somehow is corrupted. But then the whole Bitcoin network will fall to zero. So do you know what I mean? If someone can go in and grab and get access through cryptography, all our coins, and it falls to zero, then there's no value for that person to do that.
Yep.
It's like a bit of a... Yeah, so unless they...
I've heard that argument before, but I still think that doesn't mean it might not happen, because people are stupid and they'll do it and then realize that that's what they've done.
Yeah. So I think, again, what I do is I keep an eye on how healthy the network is, how centralized or decentralized mining occurs, that the node network, that there's, Bitcoin knots is growing at phenomenal rates. And that's important because... Bitcoin Core are undertaking, allowing op return and to virtually be eliminated through the filters and the like. So that's a new software coming out on Bitcoin Core in October that, we really need adoption of Bitcoin knots to keep those filters in play to ensure that, we're not arbitrarily storing JPEGs and, non-financial data. And, it's a financial network. We want it to be something special that was created by the cypherpunks, 15, 18 years ago that was worked on well before their time that doesn't allow central banks to bail out with no consequences central banks that make absolutely high risk bets on housing markets or whatever it is. And that's what happened with GFC, right? That lead up and what occurred, that's why the movement emerged. And that's why we saw these cryptocurrencies as well, which emerged out of Bitcoin.
It's holding accountable companies. If you speculate on Bitcoin with your Bitcoin, with your money, you speculate on something and it fails, you don't get your Bitcoin back.
Yeah.
Sorry.
That's right. And listen, from a sovereign, I mean, if I do something incorrectly, that is on me.
Yeah.
Right? So let's understand there is responsibility that goes with being
that
sovereign.
is a reasonable risk too.
Yes.
Talking about risks.
Yes, that's right.
The other aspects, unregistered investments, obfuscation, so not being transparent with things. Bitcoin is completely transparent.
Absolutely.
The ledger's there and will continue to be there forever for anyone to look at.
I mean, I think there was, I talk about transparency. I think there was an election that was, I can't remember what country it was in the last 18 months that was basically put on the blockchain.
Oh, really?
Yeah, it was actually recorded. So, I mean, I think it's pretty transparent. That's for sure.
Yeah. This has been fantastic, Bill, chatting to you about Bitcoin, not crypto, Bitcoin,
yes,
and hearing your journey. We're going to have you back. Anyone who wants to put questions in for us, dispelling myths, give us hard questions, and we'll answer them.
Yeah, we didn't touch on treasuries or what's happening with strategy.
There's heaps more to talk about, and
I'm sure there's plenty of time for that. So I'm looking forward to it.
Yeah, cool.
Yeah,
Thanks a lot.
Good stuff. Thanks, Ryan.